I want to thank you for joining us. Before we get started, I'd like to do a quick sound check. I think most people can hear me okay. Is it pretty clear? If it's pretty clear and everything's good to go, then just say yes one more time and we shall. Okay, good job. All right, thanks everybody. Cool. All right, we're going to get started just a little bit early. This is Sherry. I'm your host for today's Traders Exclusive Strategy Series event. Our experts today are going to show you how to buy options only at the proper time to supplement your income, even if you have zero trading experience. We're going to define the trends and the movements to be traded. We're going to see how to stay calm, impartial, and disciplined under the uncertainty of risk. And we're also going to hear about key support and resistance levels. I want you to take a look at tradersexclusive.com. We regularly post articles and video clips with valuable trading tips and techniques there. This is also where you're going to find a recording of today's webinar. And before that, of course, we have to share a quick disclaimer. And you guys know the drill, but this satisfies our legalities. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. These are educational presentations. Please take notes, write your questions down, a little bit of context, and try to hold your questions until after the presenter is finished, because he will allow you time for questions when, at the end of the presentation. So anyway, I want to make sure that we're good to go. Okay, all right. Our first presenter is Stephen Brooks. Let me just get right back to where I'm supposed to be. And he is going to bring us a topic, how to generate weekly buying incomes. Oh, wait, hold on. Roll that back. How to generate weekly income buying options. Stephen Brooks is not your typical trader. He does not have a math or finance background and has never been to business school. Rather, Stephen is a former professional baseball player who got into the markets because he needed to supplement his income on top of his $1,200 a month salary as a ball player. So from the beginning of his trading career, he realized was not a good trader. Instead of trying to pick up if stocks would go up or not, he instead decided to study the data and find patterns that repeat themselves time and time again in the market, to the point where Stephen's trading style is almost purely data-driven. Through simple data back-tested strategies, Stephen has not only been able to become a seven-figure trader, but he's taught thousands of stay-at-home traders to become more consistent by following his simple step-by-step data-backed trading systems. So I'm going to make Stephen the presenter now. And Stephen, I hope you're ready to share your screen. And I've also made it so you can see. Okay,
how about that? Can you
go.
see my screen?
Yes. How to
how about,
win
can you hear my
on.
voice?
Yes, I can hear your voice too. Thanks for joining us.
Okay?
I appreciate it very much.
Do I
Take
sound
it away.
okay?
I'm going to mute myself. Yes, you sound great.
All right, very good. 77 in the chat box if everyone can hear my voice and you can also see my screen at the same time. Quick 77, just so we know that the audio and the visual is out of the way and everything is working 100% properly. Very good. So let's get right into the good stuff. So here's the deal, right? As we all know, 2020, it was a crazy year for the stock market. Yes, we had one of the fastest and largest crashes in the history of the stock market, but at the same time, we really had some stocks that had incredible gains. NIO grew more than 1,100% in 2020. Tesla grew nearly 700% in 2020. Peloton, Moderna, and Zoom Video each grew more than 400% in 2020. Now, after spending a ton of time researching these very stocks, we are starting to see that they all had the same things in common before they rocketed higher. While 2020 was a great year for large gains in specific stocks, far too many traders missed out on these historic moves. I believe 2021 is going to be much, much better as we can now locate stocks before they rocket higher, easier and quicker than ever. So what I'm about to share with you is truly incredible because after trading for over 13 years, after making over $1 million in the stock market, and after working with thousands of individual traders, I have never seen the kind of mind-blowing results that I'm going to be sharing with you here today. So what my team and I have found after 16 months of studying the data, after looking at over 10,000 stocks and over 25 million individual trades, we have found something which I consider to be an absolute breakthrough. So here's what we're going to cover during this training. I'm going to show you how to know if your trade is gaining momentum or if it's time to sell. I'm also going to show you a copy and paste trade in the NASDAQ that has had $81,895 in profits in just the last 180 days alone using a simple $1,000 contract. On top of that, I'm going to show you a secret trade in the Russell 2000 that had a 17 times better result than even Bitcoin did in 2020. On top of that, I'm going to show you what Zoom Video, Peloton, Tesla, and yes, even GameStop all had in common before they rocketed higher and how to identify your next multi-bagger trade. And then on top of that, I'm going to show you how you can simply scan for these opportunities daily without having to do any research yourself. Now, my big promise to you for being a part of this training is, first of all, look, you're going to have a blast, right? This is a ton of fun, and I absolutely love teaching individual traders just like yourselves how to win more trades and achieve higher profits. But ultimately, my big, bold promise is that after sitting through this training, you will never trade the same way ever again because of opportunities like $18,000 in 8 trades in Overstock.com or $23,000 in just 5 trades in Workhorse, or yes, $81,895 using one single contract in the NASDAQ in the last 180 days. But before I teach you exactly how to do this, I want to first make sure that you are currently in the right spot. So if you want to know what to buy, and even better yet, exactly what price to buy it at up to 3 days in advance, well, then this is for you. If you are frustrated being on the sidelines and would like to get in on the next Tesla or Zoom video, then this is for you too. If you are sick and tired of getting chopped up by the market and would rather win on up to 82.46% of your trades, then you are in the right spot. And finally, if you need a specific and step-by-step plan and you want to avoid learning this all on your own, well, then this is for you. Why? Because the truth is this. This is something anyone can do, even very part-time. So guys and gals, I hope that you are starting to feel like you are in the right place. If you are in the right place, let me know in the chat box right now by giving me a big fat 44. I want to make this training as interactive as possible, so please give me a 44 in the chat box right now if you can say that you are in the right spot. There we go. We got James in the house, and Peter, and Michael, and Frank, and Stefan, and Dale, and Paul, and Irving, and Wolfgang. I love that name. And Travis, and Jonathan, and Julia, and so many more. Now, my goal for this training, the one that you are on right now, is to make this training worth at least $5,000 to your investments. And look, these are the exact same trades I use myself, and boy, do they work. So there's no doubt in my mind you're going to get the kind of value if you commit with me. So my ask is that you just treat this training as if you paid $5,000 to learn this. And what that really means is, look, I know right here, right now, you have plenty of opportunity to be distracted away from recovering on this training. But if you want that $5,000 of value free out of this training, you have to limit all of your distractions and, of course, stay all the way until the end. Now, full transparency, I don't want anyone to have any anxiety about what might happen at the end of the training. We do have an offer for you to join us this Monday morning for a live trading session using the world's first GPS created for the stock market. Now, this decision will be completely up to you at the end, but I just wanted to be 100% transparent so you could focus on the training and not worry about what comes next. And again, I promise you that if you pay attention, you're going to get that $5,000 of value free out of this training. Does that sound like a fair deal to you? Very good. So, who is this Stephen Brooks character who has been going on for the last handful of minutes? Well, yes, that is me on the right-hand side of the screen. I am a former professional baseball player, and when I did play, it was with the Kansas City Royals organization. And on top of that, I want you to know something. I did not study finance in college. I do not have a math degree. I've never worked at a hedge fund. But what I did have was an incredible desire to achieve financial freedom. And over the past decade or so, I have been able to go from a washed up baseball player into a millionaire trader using the exact same methods that not only am I going to be teaching you here today, but I've taught thousands of traders just like yourself to find success in the stock market. Now, before we begin, my lawyers, they make me say this slide. So this is our disclaimer. Make sure you're paying attention. Number one, this is not a get rich quick type of thing. Nothing is. End of discussion. Number two, this is not effortless earnings. You will need to pay attention during this training. You will need to take notes. You will need to ask questions. And of course, you will need to take action on these methods following this training. But just because my methods are less risky does not mean that they are risk-free. And finally, my results are not typical. However, I am going to walk you through the trades that I am using to get very good results. But please, again, folks, understand that my results are not typical. Okay, traders, we are now into the meat and potatoes of this training. So if you did not have out a paper and pen out before, you want to go ahead and do it now. Because on this very training, live, you will be taught a systematic way to buy stocks before they rocket higher and sell stocks before they crash. And during this training, I am going to show you a few very specific examples of exactly how to accomplish this, and the results are just incredible. But the best part of this whole system may be that this can really be accomplished by anyone, beginner or pro, as long as you are able to follow directions. So before we begin, I want you to know these methods, they work hands down. So I need you all to promise me something. I need you all to promise me that after I share exactly how to buy stocks before they rocket higher, that you will go out there and you will take action on this system immediately following this training. So give me a 55 in the chat box right now if you promise to take action on this system immediately following this training. Let me see those 55s in the chat box. Let me see all my action takers on this training here today. And you know what? Just as I suspected, we got Dale and Chris and Gary and James and Frank and Michael and Wolfgang, great name, and Dale and Irving and Juan and Marco and so many more. Now, one of the things that we do at Stephen Brooks Trading that is very different is that we allow our students to request our data team to look into strategies, systems, or trades they would like us to test out for them. Now, these requests come in all different shapes and sizes, but about 70% of the requests that we receive are related to indicators. And it makes total sense that we get so many requests to dig into the numbers when it comes to indicators, because indicators, as we can see, are a very nice and easy way to take what some would say are more complex mathematical calculations and plot them on a chart as very simple buy and sell signals. Now, we get requests on many different indicators, but primarily our biggest and most frequent request involves MACD. Now, how many of you on this training have heard of MACD before? Give me a yes in the chat box if you have heard of MACD before. There we go, many of you. Now, quickly, for those that don't know, what is MACD? MACD, an indicator, the one you see before you, it does two things. Right? The first thing it does is it takes a comparison of the 26 and the 12 period moving average to come up with the MACD or white line you see before you. The second thing it does is it takes the 9 period moving average to come up with the signal or red line you see before you. When the MACD line crosses above the signal line, that's a buy signal. And when the MACD line crosses below the signal line, that's a sell signal. Again, a lot going on behind the scenes, but the MACD indicator, it does give you a simple visualization of buy and sell signals without you having to run any calculations yourself. While MACD does provide very simple buy and sell signals, we get requests every single week specifically about MACD. Recently, we received such a request from one of our students named Gerald. I'll read it to you. He goes like this. He goes, Stephen, I have been trading MACD for a year now and have not been able to generate a profit during that time. I've watched every video and read every book when it comes to MACD and am following the buy and sell signals religiously. The problem is, I feel like I'm getting in too late after the move has already happened, or I'm getting in on a false breakout. Can you have your data team, when they have availability, look into finding a consistently profitable MACD trading system for me? And of course, when we get a request like this, we go to work. So here's what we did. We took the top 100 most popularly traded stocks. Now that list includes companies like Microsoft and Procter & Gamble and Intel and ExxonMobil and many, many more. And what we did in those stocks was we went back to the year 2005 in the data for bullish trades where we hoped the stock would go higher. We bought when MACD gave us a buy signal and exited when it gave us a sell signal. And for bearish trades where we hoped the stock would go lower, we sold when MACD gave us a sell signal and exited when it gave us a buy signal. Very simple. And looking at these charts, one would think this is a very viable strategy. But the problem is, just by following your basic MACD entry and exit system, this trade really works very badly. To gauge based on consistency, we look at win rate. And of course, a 34% win rate is not consistent at all. And for profitability, we look at average trade. And of course, negative 2.21% per trade is not profitable. Now, after looking at these bad results, I thought to myself, what if we just placed bullish only trades on MACD during bull markets only? Surely, if we bought on buy signals during bull markets, surely that would make things much better, right? But the problem is, it didn't really move the needle at all. A measly 3% increase in overall win rate, and unfortunately, we are still negative per trade. Now, this did surprise me. I mean, in our study, we had Amazon, we had Apple, we had Netflix, we had Tesla, we had Alibaba. We had so many stocks that have grown tremendously. I really thought this should have worked, but of course it didn't. Now from here, we took it one additional step further. Clearly, these two tests did not work. But what about placing bearish only trades if stocks were in bear markets, right? Maybe that would work. And again, my friends, no dice. In fact, the bearish only study was way worse than the other two. Now, many of you know this about me already, but the number one reason why I have personally stayed away from indicators in my trading career is because myself and my data team have really not been able to find any profitable strategies coming off of indicators similar to the one you see before you in MACD. When we get requests to run the numbers on indicators, our studies tend to kind of show the exact same result. They just do not work very well at all. But something that happened during my latest visit to my grandparents' house changed it all for me. You see, when I was growing up, for every major holiday, my family would drive from where we lived in New Jersey out west to visit my grandparents in central Pennsylvania. Now, this was a 3.5 hour drive. So before each trip, we would go to the grocery store to get drinks, snacks, and ice to fill up the cooler that we kept in the trunk during the long drive. We would also take our small 6-inch television that we kept in our kitchen. We would place it on top of the armrests on the driver and passenger seats, and we would plug it into the lighter in the dashboard so we could watch our tapes. Now, every trip we took the exact same roads, and we always got to my grandparents' house in 3.5 hours without fail. Now, this past holiday season was the first time I actually made that drive myself, because for the past couple of years, my grandparents were going to their winter home earlier each year. So this holiday season, I got into my car and I put their address into the GPS, and the GPS said it would take roughly 2 hours and 15 minutes. Now, at the time, while this estimate was very different than I was used to, I didn't really think much about it. But during the drive, I started to notice I was taking roads and highways that were very different than we took when I was much younger. So when I arrived at my grandparents' house in 2 hours and 15 minutes, I went to my mother, who was already there, and I asked her, "Mom, why did this same drive used to take us 3.5 hours? I just went a completely different way than we ever did when I was growing up." Now, after my mother made a few, how do I say this, choice comments about how fast she thinks I drive, she said, "Steven, we didn't have a GPS back then." You know, I didn't actually think twice about what my mother said about the whole GPS thing, because let me be honest with you, I am normally a very healthy eater. But when I get to my grandparents' house, I turned into more of a professional eater. Each Christmas, for as long as I can remember, my grandmother would bake me my favorite brownie cake. Now, sometimes, yes, I was a good boy, and I would wait until after dinner to have my dessert, but other times, like this past year, here's what I would do. I would walk into the house, I would say hello, and then I would immediately, without any hesitation, walk up the stairs into the attic where I knew my brownie cake was waiting for me. Now, in my grandparents' attic, in the back right corner, right next to where my cake normally is, there are stacks of newspaper clippings from odd and interesting stories from over the years. And while I was eating my brownie cake this last time around, I stumbled upon a very funny clipping from 1998 out of the state of Georgia. Now, this story talked about how there was a juror who was late for jury duty 2 days in a row, and he was thrown into jail just for being late. Now, of course, I had a brief laugh with myself, and I thought to myself, if they just had GPSs back then, this poor juror would never have been thrown into jail. But as soon as I thought that to myself, a giant light bulb went off in my head. When I was younger, when my family was going to go on a road trip, what would my parents do? They would take out a physical map. They would lay that map all across the kitchen table and write down the directions based on that map. Unfortunately, and you already know this, the map does not paint the whole picture because you see, a map does not tell you if there is traffic. A map does not tell you if a lane is closed. A map does not tell you if there is an accident. A map does not tell you if it's rush hour, and a map definitely does not update you in real time. But now, what used to be a 3.5 hour drive now only takes 2 hours and 15 minutes. Why? Well, because a GPS, it does tell you if there is traffic. A GPS, it does tell you if a lane is closed. A GPS, it does tell you if there is an accident. A GPS, it does tell you if it's rush hour, and a GPS most certainly does update you in real time. A GPS, it paints a much more clear picture than the map does, because ultimately, getting directions off of a map is basing your decisions from static information, where a GPS, it's basing its decisions from dynamic information. This got me thinking. We now drive much more efficiently because GPSs are able to give us direction from dynamic information. But when we are running all these tests on all these indicators, they base their output from static information. Maybe that's why we could never find anything that would work. Because you see, the market is dynamic. Yet we are using static indicators to trade a dynamic market. This does not make much sense to me at all. What we really need is a GPS for trading. Something that monitors all the factors that affect the trade and is proactive in notifying you in real time of those changes. Because in the market, the route is always changing, and we need a tool that takes that into account. So once we all returned from the holidays, my data team went to work. Instead of trying to find profitable trades using static indicators in a dynamic market, that just sounds so ridiculous even saying it. Instead of doing that, we flip the script. Because here's the thing. If volume is increasing, that is dynamic. If institutions are buying, that is dynamic. If momentum is increasing, that is dynamic. If stops are being triggered, that is dynamic. If buyers are buying over the offer, that is dynamic. If the tape is speeding up, that is dynamic. Maybe looking at dynamic information to be our GPS for trading would do the trick. So here's what we did. Instead of focusing our attention, again, trying to find times where static indicators would work in a dynamic market, we only looked at these dynamic pieces of data. And as it turns out, trading with a GPS makes a stunning difference. Here's an example. On January of this year, those dynamic indicators were all going wild in SPCE, and our GPS created a buy signal at $24.55. Now, how do we know our GPS gave us a buy signal? There's two ways. The first way is above the current day's candle, we can see a green line forming a buy signal. The second way is in the top left corner, we can see a very specific buy price of $24.55. So what price do we buy at? $24.55. And just a few weeks later, the stock goes to nearly $60 a share, netting over $13,000 from one single trade. Or again, last year, Nikola, those dynamic indicators were all signaling dynamic buying pressure, and our GPS gave us a buy signal at $12.35. And again, we're able to tell this via two ways. The first way is above the current day's candle, we can see a green line forming a buy signal. The second way is in the top left corner of the screen, we can see a very specific buy price of $12.35. So what price do we buy at? $12.35. And in just a matter of weeks, the stock goes to over $60 a share, netting over $37,000 on one single trade. Or my personal favorite, because yes, when it comes to GameStop, sure, there was a significant short position. Sure, there were millions of traders in the Wall Street Bets forums on Reddit all talking about the stock. But at the end of the day, my friends, those dynamic indicators were all firing when the price of the stock was down around $21 a share. Our GPS, it gave us a buy signal. It told us the exact price to buy at, and the stock goes to over $400 a share, netting over $128,000 in one single trade. You know what? How many of you would have loved to have gotten a buy signal in GameStop down around $21 a share? Give me in the chat box right now if you would like to see these type of results in your personal trading account. Exactly. Now, you might be looking at these type of results and saying to yourself, this must be because Steven has $1 million account. But that's not true, because the results you are seeing right now on the screen and will see throughout this entire training are based on a $10,000 account. Now, quickly, let's go back to that original study. Yes, the number one reason why we were not able to find any profitable strategies with MACD was because MACD, like every other indicator out there, it uses static information. But when we focus only on dynamic information, like a GPS for trading, our results are on a completely different planet compared to a very popular and standard indicator like MACD. Our dynamic GPS far surpasses those results. In our study, over 82% of the trades were winners, and the average return per trade was over 12%. And my friends, this is just on buying the stock. And looking back, this all makes such total sense. Why would we ever use static indicators in a dynamic market. It is no wonder that only dynamic indicators can produce such profitable results like this, like 10 trades in Snapchat, $9,200, or 8 trades in Roku, $6,300, or 13 trades in Neo, $17,000. Now, of course, now that we have created our GPS for trading based on dynamic information, and now that we have proven that dynamic information is the only type of information we should be using in the market, the next most obvious next question is, well, how do I find these trades? Based on our studies, we know that these signals that lead to what most would consider are sizable gains, they occur most frequently in about 200 to 300 different stocks. So the characteristics of a Tesla or a Moderna or a Novavax are much more likely to have these dynamic phenomenon compared to a slower moving and lower growth company like Pfizer. Unfortunately, and if you do this, I want you to know this is not your fault because financial media has absolutely failed you. Many traders feel like they have to spend a crazy amount of time not only doing research, whether it's fundamental or it's technical, but many traders feel like they need to watch the market all day, every day to quote unquote get in on the best trades. The biggest problem with a trading setup like this is information overload. Over here, you're looking at gold. Over there, you're looking at crude oil. Over there, you're looking at Bitcoin. And then what happens? You miss out on a great trade on one of your screens because you're being distracted by what was happening elsewhere. And then what happens? You get frustrated by missing out on what would have been a great trade. And then what happens? The next trade you find, whether it's a good one or not, it becomes a revenge trade. You chase it because you want to make back all the profits that you just missed out on. And then what happens? You lose money on the trade that you just chased. And you realize by chasing that one, you missed out on another great trade. And as time goes on, your account and your confidence dwindle lower and lower and lower. Now, this model, this negative feedback loop, which so many traders are finding themselves getting into, is a very large reason why the average trader is not as successful as they would like to be. And I get it. Who wants to miss out on great trades? I certainly don't. So here's how we fix that. The first thing that we need to do to make sure that we never miss out on any great trades is to make sure we have a very specific watch list of stocks that are aligned with our goals. Personally, because we have run the numbers so many times, we know the stocks that these trades do very well with and the stocks that don't work so great. If the trade works really well in a Peloton, for example, or a Zoom video, or a Zillow, we add those names to our watch list so that we are only focusing on stocks that we know our trading style does very well with. And the ones that this does not do so great with, we don't add those to our watch list because those would only be distractions. Now, after we put those stocks into our watch list, then what do? We take those stocks and we run a scan on them. Now, how do we do this? Very simple. We take that watch list, which again is compiled of all the stocks we know ahead of time this works very well with. And we say, okay, go find me all the stocks right now we should consider buying. And in a few seconds, the scanner completely for us, just by clicking one single button right here, goes, okay, here are all the stocks that you should consider buying right now. Then from there, we can do one of two things. The first thing we can do is to simply check out the trade. So in this example, I can see SAVA is the first stock that shows up on the scanner. Very simple from here. We go look at the actual chart of the stock and we ask ourselves a very simple question. How has this trade worked in this stock? By looking at this chart, we can see recently SAVA netted over $39,000 on just 5 trades. And what's more, we can also see there is a buy signal from our GPS at $57.83. So if we wanted to go ahead and follow the GPS, what price would we buy at? $57.83. Or, so you don't have to stare at the scanner all day, you can just click this button right here and then click on alert when scan results change, so that when any stock shows up on the GPS, like a GPS, you immediately get alerted, in this case, to your phone and email. Here's an example of an alert that we received in Riot blockchain. Clearly, for us to get an alert like this, there has to be a very good trade to take in Riot blockchain. And once we got that alert directly to our phone, we went in and we checked the chart. We saw that Riot blockchain netted over $46,000 in just 6 trades recently. So of course, we have a great deal of confidence in taking the next trade. We can also see that we have a very specific buy price on the screen of $22.22. So what price do we buy at? $22.22. In just a matter of days, the stock goes to over $60 a share, netting over $16,000 in one single trade. I have to tell you, it is so beautiful when you don't have to do any research yourself. This dynamic GPS, it works so well, and the system just notifies you of when there's an amazing trade to take. Think about it this way. To just be sitting like on your couch, to get an alert like this on your phone in Tilray, to log in and see this trade does work very well in this stock. And what's more, to see the exact price to buy at, $26.87, to just follow the directions, no research, and in less than 1 week, you net over $11,000 in one single trade. So let's recap what we have gone over so far. By now, you know how indicators, unfortunately, they base their signals from static information. The reason why indicators do not show solid profits is because static information does simply not work in a dynamic market. But when we use dynamic information like a GPS for trading, our results are drastically better. Just picture what your results can be when you start trading with the world's first GPS for the stock market. And by now, you know that so many traders get into this negative feedback loop because of information overload. Instead, we prefer the approach of scanner to alert to follow the directions, which not only gives you a ton of focus, but allows you to never miss out on any great trades. So at the beginning of this training, I promised you that I would show you a revolutionary new system that you could use immediately, whether you are a beginner or pro. So I have to ask you, was our time together valuable? Did you enjoy this training? Do you understand now how I'm able to do what I do in the stock market, and how trading with the world's first GPS for the stock market can get you such big time results? And can you see how this system will allow you to profit immediately, whether you are a beginner or pro? And what's more, do you see how little time and knowledge is really needed to invest? Because here's the deal. I have complete confidence in you. Why? Because you promised me that you were going to go out there and you were going to take action on this system immediately following this training. And while we did spend about 40 minutes together and go over a few exceptional trades, there's only so much we can go over. Imagine spending more time together, how much more valuable that would be to you. Now, in the beginning, I also promised you an opportunity to join me in taking your next steps together and trading with me live this Monday off of our GPS, which was developed to give you the edge you've never been able to have before in the market. So, as you know, this is not your average indicator. Why? Because the average indicator is looking at static information, where our GPS, it's looking at dynamic information. On top of that, there are three major problems that many traders face in a given day that this GPS completely solves. Problem number one, I don't feel confident in my trade. And of course, if traders are not confident in the trades that they place, they tend to second guess all of their decisions. Well, not with GPS Trader, because with GPS Trader, we show you a running P&L graph of trading our system for the stocks and timeframes you are looking at. But not only that, we also show you a running P&L of following our system. So the question is this: 6 trades, $15,000 in PLUG. So if our GPS gave you a buy signal, would you feel confident in placing the next trade? Of course you would. The second problem that our GPS solves is the problem of I don't know when to get into the trade. Well, that problem goes away with our GPS because our GPS tells you the exact price to buy at. Here's an example in PLUG. Our GPS is saying to buy at $57.84. So my question to you is this: what price would you buy at? $57.84. The third problem that our GPS solves is the problem of I don't know when to get out of the trade. Well, that problem too goes away with our GPS because our GPS will give you the exact price for you to exit at by trailing your stop for the entirety of the trade. So let's take a look at an example in action. That bright green line right there, that's our entry price. In this case, around 40 bucks a share. Then we can also see we have these individual smaller green lines. Those lines are where your stop loss should be placed on those days. So in this example, our GPS told us to enter around $40 a share. It told us where to place our stop every single second we were in the trade, and the position was ultimately exited at around $160 a share for what would have been a very nice multi-bagger trade. What is very important to me is that anyone can participate because our GPS, it works with stocks, options, and futures on all time frames. And the amazing thing about GPS Trader is yes, it absolutely does a very good job of signaling when stocks are about to rocket higher. But it also does a very good job of signaling when stocks are about to crash. Let's take a look at an example in the Russell 2000. Lock in on that date at the top portion of the screen. On February 21st, 2020, that was the day before the corona crash began. Our GPS gave us a sell signal at 1672.8. So we sold it there, of course. And then once we entered the position, our GPS told us where to trail the stop for the entirety of the trade. And ultimately, we covered that short around 1094.1 in the Russell 2000, which not only netted over $28,000 per contract, but it also timed the market perfectly as our GPS told us to sell the day before the crash began and exit the day after the crash ended. So I want you to join me live this Monday for a live trading session. Recently, we have gotten some very good results during those sessions. Recently, we netted over $1,400 during a session. Another session, we netted over $1,300, but in this case, it was only on one trade. And then recently, I think this was last week, we netted over $500 during the session. I so badly want you to join me live. My goal on that session is to make you at least 100 times the cost of admission. So for that, you can join us live for less than $1. So open up those browser tabs and head on over to stephenbrookstrading.com/99 and invest in yourself today. Now, quickly, if you are sitting there thinking that somehow 99 cents is too much, take a look at what I did recently in less than 10 minutes trading off of the GPS, $950 in profits. While not every single trade is going to be such a big winner in such a small amount of time, you are able to see just how powerful our GPS is. So again, my friends, it's this Monday morning for 99 cents. You can no longer get a cup of coffee for 99 cents. You can no longer get anything in McDonald's for 99 cents. But you can join me live this Monday and trade with me off of the world's first GPS created for the stock market. Now, I'm looking at the clock and I see I have about 2 minutes to go ahead and answer a bunch of questions. So if you have any questions in the chat box right now, go ahead, pop those in. We do have about 2 minutes right now for a little bit of Q&A. Douglas says, does it show the dynamic sell prices? So Douglas, this works with stocks, options, and futures on all time frames. For long entries, right, where you want the stock to go higher, it tells you where to buy and where to trail your stop. For short entries, where you want the stock to go down, it tells you where to enter, and then it tells you where to trail the stop for the entirety of the trade. How much is GPS Trader? So we sell this on our website for $5,000 every day, but that's not being offered right here. We are offering you 99 cents, less than $1, my friends, to join me live this Monday for a live trading session. And again, on that session, my goal is to make you 100 times the cost of admission. And we've been able to do that not every time, but way more times than we have not. So Greg says, I see the Russell 2000. What about ES futures? So as a reminder, Greg, this works with stocks, options, and futures on all time frames. So of course, the S&P futures is one of those as well. So Ken says, how much after the $99 trial? So there's no $99 anything, and there's no trial, Ken. You want to make sure you're paying attention here. This is 99 cents, 99 pennies, less than $1 for one single live trading session with me, where my goal is to make you 100 times the cost of admission. Douglas says, to this trade a 5-minute chart? So again, Douglas, this is stocks, options, and futures on all time frames. However, based on our studies, it works best on a 1 minute, 10 minute, 2 hour, and daily time frame. Very good. I will kick it back to the moderators of the event.
Nice. Very, very nice. Okay, everybody, you've got your link right there in the chat. I also sent it out to the whole group. You want to take a chance on this? I mean, 99 cents. Can you even get a coffee for 99 cents right now?
You can't get that. You can't get McDonald's. You can't get anything for 99 cents. And the thing about getting McDonald's or a coffee for more than $1 is that you get 0 ROI on that. I mean, again, do you think you have a good chance of making an ROI on 99 cents? I do. And for the people who do too, I want you to join me this Monday.
Good deal. Thanks for being with us, Stephen.
Thank you so much.
Very much. Have a great day. And we're going to get on over here. Let's see. I want to show off your slide one more time, but you have a great day, and I appreciate your presentation. That was awesome, right, everybody?
Thank you.
Thanks very much. All right. Let's see. That was Stephen Brooks with Stephen Brooks Trading. You want to get in on that 99-cent deal, you guys. Now, I want to let everybody know that if you have to leave early, we are recording this. And you just slip on over to tradersexclusive.com/archived_webinars. We'll have this up potentially tonight, but definitely by tomorrow. And we also post up all of our educational webinars. You just go right there to that page. If you can see my cursor circling the green arrow, you go there and then you go over here. We've got all of our dates listed, and then you click on the here where the green arrow is pointing. And then from there, you can see all of the webinars that we have. There's a wealth of information there. So we'll move on now to our next speaker, and it's Eusebio Nanni of Max Trading Systems. He's going to talk to us about how to build a trend following strategy. And Eusebio is well known and highly respected with 38 years of experience in Forex, futures, stocks, and options, plus 15 years in the banking industry. Eusebio has not had a losing day of trading in the past 4 years, and his record of profit taking and insistence on strict risk management have brought him wide recognition as a world-class trader. Welcome, Eusebio. I appreciate you coming in, and I'm going to make you my presenter, and you'll have to unmute yourself, I think. There you go.
Yeah, thank you very much, Sherry. Thank you for your
Yes.
amazing support. So,
thank you. Take it away.
Okay, thank you very much. Welcome everyone to this event. And let's make a quick audio and video check before starting. Do you see my screen and do you hear me well? So if you would like to type a yes in the chat, I would really appreciate. Okay, all good. Yes, yes. See and hear clearly. Yes. Okay. Thanks, Stefan. Oh, I recognize some of our Max members, so I really appreciate. So, indeed, let me start with a quick disclaimer as usual. So, this presentation is for education purpose only. We do not provide investment or trading advices. Investing and trading always present risks, so do not invest or trade money you cannot afford to lose. And of course, past performances are not indicative of future results. So now let's start the content of today. Just let me give you a few words about who I am, but Sherry has already presented who I am. I am indeed one of the Max instructor in the Max trading system. And I am a past software engineer. I was a services manager in the IT industry, and for around 28 years. And during the last 15 years of my career, I have had the privilege to work with some important banks in Europe, and this has given me the opportunity to meet some traders from whom I have learned a lot. But I am interested in trading and investing in different markets for many more years, so around 30 years now, more than 30 years. So I have traded in the stock market, the options market, the futures market, and presently I'm almost trading exclusively in the forex market, in the currency market. So we have two other partners in the group, so Craig and Chris, who were in fact the partners of the designer of the market trading system, Dr. James Pruitt, known as Tiger. So that being said, let's start with the content of my today presentation. Today, because we are trend following traders with the MAX, I will define how to, or I will explain how to define a trading method or a trend trading method. I will first of all describe the different steps we have to cover, and then I will go progressively in each of these steps, and then I will make a quick presentation of our offer. So when we consider a trading process, we have always to consider what are the essential pillars of the trading process. And for me, there are 5 pillars. First of all, and obviously, we need a trading method. We need a trading system. We need also a trade risk management and a money management in order to control the risk whenever we take a trade and in order to grow in a safe way our trading account. We need also to have a good understanding of the global context, because the global context contains in reality all the driving factors of the market we are considering. Examples of global context elements are the decision of the central banks, their monetary policy and their interest rates decision. But we have also all the economical news releases, like for example, a few days ago, the CPI. We have also the geopoliticals, which may drive the market, which may influence in somewhat the market, and we have known, we are knowing for the moment a very important one, which is the coronavirus with the worldwide epidemic. We have also to consider the psychological aspect of trading, which is a point which must never be neglected and unfortunately often neglected by many traders. And then another point, which is also very often neglected by many traders, is the organization. By organization, I mean what are the steps we have to go through during our trading session, and for that it's the preparation of the trading session, how to monitor and how to execute the trades, how to update the informations several times during the day, and how to make a debriefing of our trading session in order to control if we have followed correctly all the rules and the concept of our trading approach. And there are other very important points we have also to consider if we want to make of our trading activity a professional activity. But today I'm going to focus on the first point first. A few weeks ago, in my previous presentation, I have described how we proceed for the global context analysis. Today, I will focus on the trading method itself. And so, in order to define a trend trading system, I think that we need to have at least the 5 following steps. First of all, we have to define what are the trends we want to trade. I have seen very few trading approaches defining how to consider a trend or what a trend is. And inside a trend, we have to define also the movement we want to trade. Then, once we have defined what a trend may be, we have to define how such a trend may start and how such a movement inside a trend may start. And we will consider the start of a trend or a movement as what we call an entry setup. They will be, in fact, specific price action patterns. Once we have an entry setup, this does not mean we have a trade. We still have to validate that the entry setup pattern is valid. And we will make several types of validations. We will consider the technical analysis aspect of the setup. This means, is the pattern a correct pattern? We will have to consider if our entry setup is in agreement with our global context analysis. We will have to consider the risk we associate to the trade. And if we day trade in a small time frame, for example, the 5-minute time frame, the 15-minute time frame, the 1-hour time frame, we will have also to consider other conditions linked to some specific critical time period during the day. There are some times during the day we have to pay extremely attention when day trading. Then when all these conditions are fulfilled, then we have the trade and we can execute the trade. Once we are in a trade, we will have to define how to handle the trade in order to progressively reduce the risk we are assuming on that trade, and at some point to even cancel completely the risk we have on that trade in order to have a guaranteed profitable trade. Once we achieve that point in our trade, then we can consider to optimize the profit we can extract from that trade. And of course, we will have to define, in order to close the trade, we will have to define how or when a trend or the movement we are trading inside that trend will possibly exhaust or reverse. And so I'm going now to go a little more in details in each of these steps, and I will illustrate with examples. So how to define a trend trading method? Of course, the first point is to define what a trend is. And there are several known techniques to define a trend. A well-known technique is to consider that when we are, for example, in an uptrend, we have to pinpoint higher highs and higher lows. When we are in a downtrend, we have to pinpoint lower lows, lower highs. A second method is using one or several moving averages, and the direction of these moving averages will give the direction of the trend. And a moving average is an indicator, of course, but we can also use other tools, other indicators. Now, of course, one point some traders can exhibit is using a technical indicator is not necessarily appropriate, because technical indicators are derived from the price action itself, are calculated from the price, and they are always lagging. That's true that an indicator is always lagging, more or less, but that's not the point. In fact, the point is, how do we use that indicator in relationship with the price? We have to exploit the relationship between the behavior of the price and the behavior of the indicator itself. So let's see on the charts these different types of definition. In this case, we have the price going upward. The pair in itself is not important, the time frame is not important, and along that up movement, we can start with a low, then we have a high, then we have a higher low, we have a higher high, another higher low, another higher high, another higher low, and so on, until this pattern of higher highs, higher lows is broken with a lower low and a lower high. When we have such a violation of the pattern for the uptrend, does this mean that the trend is reversing? Not necessarily. We may have what is called a complex correction or a complex pullback before possibly the trend resumes with another higher high and then possibly a higher low. So this is the first example how we can define a trend. Another way, as I have said, is to use one or several moving averages. Many trading system uses, for example, 3 moving averages, and the direction of these moving averages will give the direction of the trend with very specific behavior between the price and these moving averages. As long as the price will go, for example, like in this case, upward, the price will make regularly some pullbacks, and some of these pullbacks will come close to one of the moving averages, and sometimes by the pip. It may be the short-term moving average, but it may be the long-term moving average. And sometimes the price can, of course, cross the moving average before resuming the trend. But this is not the approach, the two approaches I have just described we will use in our max trading system. We use, in fact, another type of analysis considering what is happening in a higher time frames. And in this example, so we have the same pair, the euro-US dollar, and on the chart itself, we have a more sophisticated type of moving average, which is very close to the price action, in order to define the possible movement inside a trend. And the trend itself is indicated by that line in green and red at the bottom of the screen. We call the slow bias or the long-term bias, which will indicate, in fact, an uptrend when the line is green and a downtrend when the line is red. And so you can see in the yellow rectangle an uptrend because the slow bias was green, and inside that trend we have 3 movements we can possibly trade. And similarly, if we consider a downtrend, so everything can be used in a symmetrical order to define so the downtrend and the down movement inside this downtrend. Now, when we have defined a trend, we will have, of course, to define when a trend or a movement inside that trend may start. And I have said that we use specific price pattern we call entry setup. And these setups are high probability entry setup. When I say by high probability entry setup, this means that the success rate of these price patterns is at least 70 to 75%. So this means that whenever we see such an entry pattern, we have a probability of 70 to 75% that the trend following that entry setup will be a profitable trade. And this is when we ignore the global context. When we take into account the global context, then the winning rate will jump to 90 and 95%, which is a very, very high winning rate. And so let's see that on an example. So I still take the euro US dollar. And on this example, I have noted 3 types of entry setup. Whenever a trend starts, indicated by a change in color in our slow bias indicator, we will have to pinpoint one of the possible entry pattern we can observe at the beginning of a new trend. And in the max, we have defined 3 types of entry setup. This is an example of such an entry setup, which is called a BO-MO. MO means a momentum entry, and BO means breakout. So this bar, this candle shown by this first green dashed vertical line is called a breakout MO, because in fact we can see that we have some kind of breakout of a small consolidation zone mode. And we have to define what is a consolidation zone, of course. Later in the trend, we have some other possible entry setups, and we have in fact 2 types of entry setups. An entry setup which corresponds to a resumption of the trend, following generally a pullback and sometimes a deep pullback. And this kind of setup is called a REMO, for resumption momentum entry. We may have other entry setup, of course. We have 2 of them and some variations like breakout entry setups. You can see that later the trend has reversed to the downside because the slow bias has turned to red, and then resumed to the upside when the slow bias turned again green. And so we have another entry setup at the beginning of this new uptrend, which is called a safe and perfect MO. It is one of our 3 possible entry setup we have at the beginning of a new trend. The third one being called a BTMO or breakthrough MO. And depending, the type of the setup depends on the type of behavior the price has in relationship with our moving average line, which, by the way, we call the ETF lines. So once we have defined, or once we have pinpointed such an entry setup, this does not mean that we have a trade. We still have to validate that entry setup, and so that trade, with all the conditions I have already previously mentioned. And so let's recap these conditions. We have the technical analysis validation, which is made by pinpointing the entry setups. We have to take into account the global context. Do we trade in agreement with the global context? And just to remind you what is the global context, for those of you who have participated to this presentation a few weeks ago. So with the global context, we are able to tell or to explain if a currency is strong or weak, if a currency is gaining strength, or if the currency is losing strength. And so whenever we know the direction and the strength of each currency, we can define the direction of a pair we want to trade. For example, for the euro US dollar, if the euro is strong and the US dollar is weak due to the context analysis, then we can deduce that we have to favor the long trade on the euro US dollar. Then we will have to define the risk we associate to that trade, and then we will have to pay attention to other conditions if we day trade. And let's illustrate that on the next slide. So here. So let's come back to our breakout mode entry setup. So first of all, we have some technical validations. Among these technical validations, so the pattern of the setup must be correct, of course. Then we can use a technical indicator just to confirm that the price is gaining some momentum. The indicator I'm showing here is called the stochastic of the RSI, which is a double indicator, the stochastic indicator applied to the RSI indicator. And we can say that in this case, when the setup bar closes, the stoch RSI is going upward, which indicate that the momentum is increasing to the upside. And so on the technical point of view, we have a valid setup, but this is not enough. Is this setup in agreement with the context? The analysis of that day, which was the 18th of May, by the way, it was yesterday, the global context for the euro-US dollar was going long for the euro-US dollar. And so this is an upward setup. It is a long setup. So this setup is validated with the global context. We are in agreement with the global context. Then we have to define the risk with that trade. The risk is defined on two levels. First of all, we have the trade risk, and the trade risk can be explained in terms of pips. For example, here we've placed our stop loss. We always place a stop loss in order to control the maximum loss we can face in a trade. And so in this case, the trade risk is 12 pips. But of course, when we say that the trade risk is 12 pips is not enough, because the risk which is much more important than the trade risk is the financial risk. We can have a trade risk of 12 pips, but we will have a different trade result whether we trade one standard lot or one micro lot. The difference of size between the two examples I have just given is 100. And so on a financial point of view, so the risk may be seen completely differently. And so a good rule of thumb will be, so if we have a good context, we can assume a risk of 2% of our trading account on that trade. And by associating the financial risk we take on the trade and the trade risk in pips, we can exactly calculate the trade size of the trade we have to take in order to never exceed the financial risk we have chosen should the trade turns into a losing trade and hits our stop loss. So now, once we have the global context and the financial risk associated, we still have to pay attention to some critical element, because when we trade in a small time frame, not all the moments along the day are equal. On this chart, I'm illustrating some of these points. For example, with these orange dotted vertical lines, I always represent on my chart the different market or the different session open and close. We have the Frankfurt open. During the Asian session, of course, we have the Tokyo open, but it is not shown on this example. We have the London open. We have the US open on this vertical line, and we have the Wall Street open, because the Wall Street open has always an influence in the Forex market. And later we will have the Frankfurt close, the London close, and the New York or US close. In yellow line, you see also the beginning and the end of the lunchtime period during the European session or the London session. And then a very, very important line, which is this red vertical line, which represent an economic news release. In this case, it was a news on the euro. And so this news can impact, of course, the euro-US dollar pair. And the news was the flash GDP quarter over quarter and the trade balance. The flash GDP quarter over quarter has been unchanged, so no surprise. And the trade balance has been negative, in fact, worse than the trade balance of the previous months. And we will see the implication of such kind of news. So there has been such disappointment when these two news releases have been released. So once we are aware of these elements, in terms of news releases, for example, we can take the trade provided we are not facing too close the news release. And we have a very specific and strict rules which tell that if the entry setup appears during the last 1 hour before a news release, we have to skip that trade because we don't have time enough for the price to develop an interesting movement to trade. If we have more than 1 hour, then we can safely take the trade. But once we are in a trade, when we are approaching the news release, at some point, we will have to close the trade in order to avoid some very speculative movement when the news is released. We never know in advance what is the result of the news release. We may have a no surprise, we may have a big surprise, but the surprise may be a positive surprise or a negative surprise. And in the case of a negative surprise, we can see a very fast spike to the downside, so hitting our stop loss, and we are not sure that the close of the trade on the stop loss will be executed on the stop loss price. Sometimes we may have important gaps, and so we never want to be trapped in such a situation. So we always close the trade before the news release. And after that, depending on the nature of the news release, we have to make an update of our global context to see if the context has changed or if the market sentiment has changed. And if this is the case, we can take other trades again in agreement with the new global context or market sentiment. Now, once we are in a trade, so we will have to handle that trade. By the way, in this example, I have mentioned that later on this blue candle, we had a safe, on this blue candle here, we had a safe and perfect move because a new uptrend was starting. But when we observe our indicator, the pattern the indicator is showing represent a counter indication. And so there are lots of techniques to exploit technical indicators, but when we use them in a very specific way, we can define when they give counter indications telling us that this trade or this setup, if we take the corresponding trade, will become a very risky trade. And so it's the choice of the trader to decide to take that trade or to skip that trade. And if the trader decides to take that trade, it may be a trade with a different risk. It may be a risk of, for example, 1% or 0.5% or whatever, a smaller risk. So now that we have validated our entry setup, let's consider how to handle the trade. And on the next page, so I describe how we handle the trade. So in order to progressively reduce or cancel the trade. And to do that, we consider at some point to bank some profit. Whenever the price moves in our favor, we can consider to bank some profit by closing a portion of the trade and leaving the other portion as a running trade until a next decision must be taken. And we will also adjust the stop loss. And so we have to define rules how to adjust a stop loss. And so let's consider now the next slide illustrating how we handle the trade. Among the exit technique we have several types. We have exit technique based on technical indicators. We have exit technique based on pure price action. We have exit techniques combining price action and specific indicators on our main chart. We have also exit techniques based on critical time period like a news release. And we have exit techniques also taking into account what we call the movement invalidation or the trend reversal. And so let me explain here two types of exit techniques we can consider and you can apply, by the way, in your own trading system, at least if you are trading trends, in fact. And so in this case, you can see on the first magenta vertical line, pinpointing a specific red candle, that the price is making two successive higher highs, while the stochastic of the RSI, I will call it the Sto RSI, is making just two lower highs. This is what we call a divergence between the price and the indicator. Now, a technical indicator never predicts what the price will do. We use our exit technique in such a way to identify when a risk appears in our trade and this risk becomes too much important. So it's a way to quantify the risk when the price is retracing. Indeed, while the price is moving in our favor, we are making a potential profit. But once the price begins to retrace, begin to make a pullback, a portion of the potential profit we had is disappearing. And the problem is we never know how deep the pullback may be. It may be a small pullback, but it may be a deep pullback, or it can be a trend reversal. And so we need a way to measure when that pullback becomes too much important in such a way to force us to take a decision to reduce that risk and so to close partially our trade. And so once we have pinpointed an exit setup, we define an exit level. And if the price hits that exit level, we close a portion of the trade. It can be, for example, as we do in the max trading system, 1/2 of our initial trade size. In this example, the price has missed to hit the stop loss, which is a good point because at this point, we don't need to make an exit. By the way, such a partial exit is called an MX meaning momentum exit. And so we keep our entire trade to run until the next exit setup. On the next exit setup, it is the next red candle. We have again a divergence between the price making two higher highs and the RSI making two lower highs. So we define an exit level, and on the next candle, the price this time make a pullback deep enough to hit our exit level, forcing us to close half of our trade. So we make our effective MX, and this MX in the 5-minute time frame catches a profit of 15 pips. At the same time, we adjust our stop loss along the trade, and for that we use a specific indicator which represent a combination of the momentum and of the volatility of the price. There are many indicators which condense the momentum and the volatility of the price, so anyone can make the job, and so we use one of them and we adjust our stop loss along that blue line. It is a blue line below the price when we are in an uptrend, and it is a pink line when we are above the price in a downtrend. So we adjust our stop loss a few pips below that line in order to avoid some spikes the price can sometimes do, like in this situation, for example, and we want to avoid this kind of too early exit. And so once we have made our MX, we have to consider how to handle the rest of the trade. And for that, we have two options. The first option is we wait for the next exit setup. We define our exit level, and if the price follow through, by the way, this exit setup was also a divergence. If the price follow through, we close the second portion of the trade, and we call that close an XXX, a complete close of the trade. This is the first possibility. The second possibility, and the choice is up to the trader, is to stay in the trade as long as the price does not reach the stop loss, and as long as the price moves upward, we continue to adjust the stop loss. And so we stay in the trade until we are forced to close the trade, because we have exit setups describing when we have to necessarily make a complete exit. And here we are facing the news release. And our rule is when we are facing the news release, in the last 15 to 30 minutes before the trade, we close the trade. And in fact, the trade will be closed, as we will see just in a moment. But the point here, when I have said our aim is to reduce the risk or sometimes to get a guaranteed profitable trade, let's analyze the point here at the MX. When we make the MX, we catch a 15 pips profit on that portion of the trade, and we adjust the stop loss on this point. And we can see that with this point, for the rest of the trade, the stop loss is above our entry level. We are even making a small profit. We are locking a small profit even on the second half of the trade. So this means that at this point, we have not only a risk-free trade, but we have also a guaranteed profit. And this is great because when we achieve that situation of a guaranteed profit, we can try to stay in the trade as much as possible as long as the trend stays valid. And this is what we can do. So we have to define after that when the trend possibly exhaust or reverse, or if we have a special event, which in this case was the news release. And in this case, indeed, we have 15 minutes before the news release, we close the trade. We close the second portion of the trade, catching an additional 47 pips, which adds to the first 15 pips to give a total of 62 pips of profit, which, because we have a stop loss of 12 pips, oh, I have a small typo here, sorry for that, represent a result of 2.58 reward to risk ratio. So this represents a plus 2.58 R. I like to use the Von Tarp notation. And because the risk was 2%, this represents a profit on the account of 5.17%. You can also observe that this XXX comes at the moment when the price reaches that blue dashed horizontal line, which is what we call a max price level. And a max price level may be a resistance or a support level. It may be a supply or a demand level we establish every week. And so this level has been established last week, last Saturday, and we can see how the price has reacted when it has reached that level. The price so began to range around that level, making a small pullback during the lunchtime period, and has failed to go significantly higher than this level after the US Open. Now, a line is never a straight line. When we indicate such a line on our chart, in fact, we have to interpret it as an area, a zone, which represents a zone of, in this case, perhaps a supply demand or a resistance level, whatever you want to call it. And so this is the process we use to handle the trade until its completion, focusing first of all on the trade risk management. So, and you can see that by adjusting regularly our stop loss along that blue line, we progressively lock more and more profit. So in a very safe way, because we had achieved that safety on the first MX. Now let me show you an example with the same pair in a downtrend. Similarly, we have at the beginning of a new downtrend, because the slow bias has turned from green to red. So we have here the pattern of a safe and perfect move. We associate our stop loss. For the stop loss, it's a coincidence that we have the same stop loss as the previous example, 12 pips. It's just a coincidence. So, and then the first exit setup which trigger, it's here this one. And this is another exit technique you can use. This candle is a long bar. It is a bar we call a long bar. And a long bar is defined in the following way. A long bar has always a length, and the length or a size is defined from its open or its high to the low. So it's the distance between the high and the low. And its length must be twice or more the average length of the previous bars. We have rules, of course, to define what are the previous bars. In fact, we have to consider the movement preceding the long bar, and the movement must contain at least two successive bars in the same color, whatever the color. It may be a pullback, it may be a movement in the direction of the trend. And so it was a long bar, and when we have a long bar, note that it is a long bar in favor of the trade. And a long bar is always a nice opportunity to bank a profit, because 2 out of 3 times, at least in the Forex, a long bar is followed by a pullback, and often by a deep pullback, and sometimes a trend reversal. And so it's always a nice opportunity to bank some profit. How do we define our profit taking? In this case, from the low of the bar, we define an exit level at a distance corresponding to a portion of the length of the long bar. That portion may be 1/4, it may be 1/3, it may be half of the size of the long bar. Personally, I choose 1/3 of the length of the bar. And so I have defined that MX level. If the price follow through, making its pullback and hit that level, we make our MX, which was the case. And in this case, the profit caused by that MX has been 26 pips. And in the meantime, we adjust the stop loss to reduce the risk on the trade. And you can see that with the last stop loss adjustment, so in this area, the second half of the trade is already locking some profit. So we are again in a guaranteed profitable trade. And this will happen very, very often if we follow that process. And then later on, the price make another long bar. You can see that this red candle crosses another max price levels without making any pullback. But then we have another max price level or support level when the price bounces off from that level, giving a nice opportunity when the trend begins to reverse also, gives a nice opportunity to close definitively the trade, so to close the second half portion of the trade, banking another 33 pips of profit. By the way, should we had waited this blue candle to close, this candle would have been, due to the trend reversal, an entry setup to go long, whether we take that long trade or not. And so we can say that in this case, by the way, the global context was short. The risk which has been taken was again a 2% risk. And in this case, 59 pips of profit, 59 pips of profit with a stop loss of 12 pips represent a reward to risk ratio of plus 2.46 R or 4.92% with a risk of 2%. And so you can see that this kind of trade, when we take the trade always in agreement with the global context, will give very, very safe trade. Of course, sometimes we can miss a nice movement. So here, for example, this up movement, but this movement was not in agreement with the context. So we can simply ignore that movement and wait for the trend to resume. But then we were facing a news release. So there were, before the Wall Street opened, there was no other trade available for that pair and that day. And so this is how we define, in fact, our trading process. You know the quote, plan the trade and trade the plan. But what does it mean, in fact? And in fact, defining how to consider a trend, defining the movement we want to trade, defining how to identify an entry setup, defining how to validate an entry setup, defining how to handle the trade, and defining how to exit a trade, in fact, is part of the plan. Plan the trade means to define all these conditions. And then you have just to execute your plan. Executing the plan or trading the plan means simply following the process we have just defined. And so it's essential to define a clear trading process. Remember the 5 pillars I have mentioned earlier in order to become profitable. And so what I have presented here for the way to define a trend following system is just one aspect of the trading activity. And in that trading process, there are many, many more details we can explain, we can teach in our courses. We have 4 courses. And in our courses, so we always insist on gaining confidence in the skills the trader must develop. And we do that by mentoring the student, by grading the homework we require from our students, and by organizing some workshops and free workshop for our members. So every Saturday, for example, we have a practice session with our member. And so for that, I have just a few minutes to present our offer here. So we have 4 courses, but the 2 main courses, which are the courses we present today, so are the standard course and the primer course. What I have illustrated with these 2 examples is what we can do with the Max Primer course, which is the a summary of our flagship course, which is the standard course, so a simplification of the training. But the standard course goes way, way further, taking into account, for example, a scaling technique, how we can progressively add to our trade in order to build a larger position, in order to get or to extract a way, way larger profit from the trend we are trading. So these two courses will start very soon in next June, at the beginning of June. The Max Primer is made of two sessions, plus a bonus session. We teach the basic entries and the basic exit. It is profitable. It takes a little more time, and it is, of course, associated with a simple trade risk management and money management. The standard course contains 7 sessions plus a bonus session with many more entry setups and exit technique. It is extremely profitable with the acceleration technique we call the scaling technique. It is comprehensive but simple, and it contains a simple but comprehensive trade risk management and risk management. So you can enroll today if you want. Here are the 2 links to enroll in one or the other course. And for the participant today, we have a nice discount to propose. If you want to have more information about what we are doing with the Max, feel free to contact us. So we have an email address, support@maxtradingsystem.com, but we have also a Skype, so you can contact us at our Skype address, which is Max Trading System. So we have also other services with a small monthly fee. We provide the price levels and the bias alert, which in fact represent the global context analysis result. And here, so you have the link if you are interested to subscribe to these information. So, and now I am open to your questions if you have any questions. Mandrip asked, do you sell our indicator? No, we do not sell our indicator. The indicators are available with the course. So every student who enroll in a course will receive our indicators and our templates. So we have our templates and indicators for MetaTrader 4, and for NinjaTrader. Monthly fee, yeah, we have monthly fee, not for the course. The course is a one lifetime price, but we have a monthly fee. I think that for the levels and the bias, which is a bundle, I think that the monthly fee is, if I'm not wrong, $79 per month, I think. But you can contact Craig at Max Trading System, so if you want to have more information. What is the slow buyer indicator? No, it is not a slow buyer. It is a slow bias, B-I-A-S. So it is an indicator which represent, let's go back to the screen, which represent what is happening in a higher time frame. For example, when we trade in the 5-minute time frame, this slow bias indicator, we call also the companion indicator, is showing what the trend is doing in a 30-minute time frame. So in a time frame 4 to 6 times higher. And of course, in the course, we explain how this indicator is built. Do I have to go through the course to subscribe to the monthly program? No, there is no need, because these informations, like the max price levels and the global context bias, are valid for any trading system, and so you can subscribe to this product without enrolling in the course, indeed. So if I use TradingView chart, these indicators can be used. You cannot use them directly on TradingView, but you can build these indicators in TradingView. If it is the case, we will give you the source code of these indicators in such a way that you can rebuild them or recode them in TradingView. But many of them are available in TradingView. For example, we are using some moving averages. The Stochastic, I think, is in TradingView. We are using also the Bollinger Bands, which are available in TradingView. There are just 1 or 2 indicators which must be recoded. But we can help you for that. Okay, no other indicators? No other questions? Is there ongoing support available after the course? Yeah, of course. When you have completed the course, you are a part of the Max community. You have access to our forum. You have access to our practice session for life with no charge. And so we always give support, so you can always contact us in case of need of clarifications about some points of the methodology. You can always submit your chart, your trade, in order for us to check if your trade has been made correctly or not. So you will get the help you will ask. Okay, I think I've answered all the questions. So Sherry, I return the mic back to you. So thank you very much for your participation.
Thank you so much. Thank you for being with us. That's a great presentation. Folks, I put the links, or the link that takes you to the links that Eusebio shared in the chat. So guys, feel free and definitely take advantage of that offer. So I'm going to bring up all right. Everybody see, hello, Mr. Randy Howell. Just one second, I just got to do a little bit of housekeeping here. Randy Howell's with us now of Trader State of Mind, and he's going to be talking to us about retrain your brain for success in trading. And Randy, I want to thank you. We're running just a little bit off schedule today. I want to thank you for your patience there. And then I just wanted to introduce you. Randy Howell is a performance coach, although I hear you're very, very famous, and licensed therapist. His work focuses on using emotions to build an effective mind for the management of uncertainty. Randy's work is grounded in emotional intelligence, mindfulness, and developing latent potential in investors and traders. He teaches them how to harness emotions to achieve the performance edge so they can effectively control their minds that's brought into the moment of managing uncertainty, rather than attempting to control the outcome. And he's based in the United States. He teaches and trains internationally, though, for the emotional finance community. His publications have appeared in many venues, and he is the author of the book, Mindful Trading, Mastering Your Emotions in the Inner Game. So thank you for being here today, Randy, and I will turn it right over to you.
Thank you, Sherry. Let's make sure I'm being heard. If just please let me know if I'm being the sphere. And well, then I'm going to pretend that I'm being heard. The first thing is,
can you see the questions?
Can I see the questions? We just got to the okay. Can we see the questions? I cannot.
Yeah, because I can still see my screen. I think I made you. All right, just a second. A little faux pas here. Let me make you the presenter. I added you as an organizer so you could see the questions.
Hey,
there you go.
What a concept. What a concept. Okay, now I'm good. And I'm assuming if I'm talking with you that people can hear me. Is that correct?
I can hear you. Everybody else, give us a thumbs up or a yes in the questions.
Okay, let's see here. Questions. Let's
lots of yeses.
Yes, I can hear you. Good. Well, first of all, thank you, Sherry, and I'm honored to be here, and I'm excited to speak with people because, you know, ultimately, bottom line is this: is the brain, no matter how successful it's been in the past in different endeavors, that brain, when you bring it to trading, is going to have some deficits for the environment of trading. We're going to take a look at that. What's wrong with that brain? So first thing I want you to know is there's nothing wrong with you. It's really more of an inheritance from our caveman days that we brought into today's world. So let's start there, okay? And this is, by the way, this is a talk for people who've been trading for a while, who have already experienced that they have a plan, they plan on trading their plan, and all of a sudden things go crazy. They don't get into trades because they're looking for more confirmation, or they get into a trade and it just going wild on them. They start throwing good money after bad. They chase losers. They start jumping out of trades once they hit the black because they're scared that the money's going to be taken away from them, or they win, they get all excited, and it ends up blowing up their account. It's those kind of people that have been trading 2, 3, 4, 5 years that have finally gone to the opinion going, you know something, there's one big, huge thing missing here, and it's between my ears. I somehow have to rebuild and retrain that brain so that it actually has a psychological edge that frees up the method edge that you're learning from all these other guys. Okay, so here we go. The very first thing is, have you ever noticed when you're researching trading for the first time and you're looking around, and trading is really made to look so simple that even a caveman can do it, okay? It just seems that way. This is the problem though. Your caveman brain, that which is called the emotional brain, is the same brain that we brought from our hominoid ancestors all the way to Cro-Magnon, all the way to Homo sapiens, all the way to that guy trying to figure out the computer right there. And it's not interested in long-term gain. It is interested in short-term survival. And the problem is, in the compressed time zones of trading, that instinctual survival urge starts triggering. And that's why you do all that crazy stuff that you say, I know better than this, but I keep doing it. Well, this is the problem. And it goes me back to the famous boxer Mike Tyson, who made the statement, everybody has a plan until they get hit in the mouth. It does seem so doable, and all of a sudden you get jerked around, things don't happen the way you want, you're totally out of control, all that stuff. And what you're realizing is that, something really interestingly is that when the brain engages uncertainty, the brain cannot tell the difference between uncertainty and fear unless it's trained to distinguish between the two. And guess what? That's where my aim is to talk to you about today. So ultimately, what you're doing is, most traders get into trading and they get steamrolled. They have no idea what they're really getting into. They're getting into a craft that defies all the kinds of success rules that you've learned in other areas of your life. Work hard, be sharp, make things happen, all that stuff. Or be perfect. If you do everything right, you won't be wrong. Then you get into trading and you get run over because those are not the rules that apply in trading. So what we've been doing is we've been misunderstanding the problem. We think that we're logical and rational beings. And it just so happens we pretend that's true. And then what happens is we are not rational beings. We are emotional beings who rationalize. Think about, if you want to see an example of this, just look at the last time when a trade ended up doing something, and you start telling fish stories, and I could have done this, it could have been that, blah blah, and if I'd only stayed in, blah blah blah. All those stories, that's rationalization. So what we're doing is we're missing the very problem. We are pretending we're rational beings when in fact we're emotional beings who rationalize. And what we do is, there's a famous saying in neurobiology, the brain only believes what the eye will show it. Sounds pretty good, doesn't it? But the eye will only show the brain what it wants to see. And that's what you're doing in trading. You are actually asking the eye to show the brain something, but the eye is simply showing you what the brain literally wants to see, and it gets you in trouble. It has a different agenda than trading success. And hence, here we go. The problem really is the brain that you brought to trading on uncertainty. Your brain was built to control outcome, to be right and particularly not wrong, and to predict the future. These are all survival adaptations, because guess what? If you control the outcome, you won. Okay, and if you won, you lived. And what happens if you're right, you're good. But if you lose, in caveman days, if you lost, you were dead. You were somebody's meal. So you can understand the powerful emotional need to not be wrong in trading. And yet, the problem with trading is you're going to be wrong a lot. You're going to be wrong more often than you're right. And as a professional trader told me the other day, he says, Randy, look, I win 40% of my trades, and that means I'm losing 60% of my trades. I need to become an incredibly good loser. And all of a sudden you go, whoa, I don't want to lose. Well, I'm going to tell you something. That brain right there that you just brought to trading is not going to hunt. It's not going to do the game that you need to produce success in trading. So that the problem in trading is that these factors, outcome, being right, and predicting what's going to happen, is an illusion. Sometimes it happens and it locks in, and there you are, you're going it. But what happens is that the moment that it doesn't go your way, remember, you want to be right, suddenly the fight-flight process is kicking in and everything starts going bananas on you. You may have a plan that's perfectly rational and reasonable and a good thing to do, but when you get it in uncertainty, okay, where you do not control the outcome, no matter what, suddenly it freaks out and suddenly you're in fight-flight, and all of a sudden that plan just flies out the window, and you become scared money, and you start chasing things that are not effective in trading. And everybody has done everything they can. They've tried willpower. I'm going to be tough. I'm positive thinking, our emotional suppression, damping the emotions down. They have tried the visualizations, the affirmations. All that stuff is good as long as it's done not in the context of stress, of challenging moments that you can't control. The moment you add the uncertainty, all that stuff blows up because it's pretty weak. What we have to do is we have to find a way of calming the emotions and finding a way to actually build different emotional responses to uncertainty, not the ones we came with through evolution. We need to actually produce a very unnatural adaptation about how emotionally you respond to uncertainty. Otherwise, it's going to stay bad news. And what I want you to do is take a look at these guys out hunting one day. This is what even getting food was like back then. These guys are trying it. At the same time, you have an animal that's already taken one man out and he's chasing another. And so, winning was a serious thing, is you had to win. These guys had to win, or they nor their clan ate. That's what moved in, and that's what became the alpha attitude. You take that alpha attitude, so focused on winning, making things happen, and what you do is you produce account blowups. What was good way back then, and we wired in to be our primitive instincts, becomes a point where your instincts are beginning to kill your trading. That's the point, okay? And you are going to have to retrain your brain to work effectively in the trading world. And don't believe me, look at your trading account. Talk to your trading account. It will tell you, because ultimately, the assumption I use in my work is that you are trading your beliefs about your ability to manage uncertainty. And the truth test is your trading account, the health of your trading account. If you're projecting your beliefs onto the markets, the trading account is telling you if those beliefs are effective. And what I know is that somewhere between 95 to 98% of traders lose money. I know that there's a lot of ineffective beliefs being projected onto the markets. And as long as you force yourself to hold on beliefs that are no longer working and draining the trading account, eventually natural selection is going to take you out. You have to decide whether or not that's what you want. Your brain, fortunately, is highly adaptive, but you have to work it because your flesh is going to resist that change. Once established, once an emotion learning has been wired into pattern, into circuitry, it's going to resist change. Yet, that's exactly what's going to happen, is that you, as a trader, eventually are going to have to take the emotional brain, that primitive brain that you inherited from your caveman days, what would be known as emotional intelligence, EQ, and you're going to have to blend it in partnership with your thinking brain, where you have that cognitive stuff that is so vital in trading, is you're going to have to get them to blend together. You're going to have to produce the emotions that give rise to disciplined impartiality. That's the trading emotional mix that you need in order to be able to get the brain, the thinking brain, with all its cognitive ability and its rational ability, to be able to analyze and execute under pressure. there are no other options. Emotions are not options. The only time you don't have them is when you're dead. And so they're going to arise. And if you allow the ones that you came stock with, where uncertainty and fear have been glued together, you're going to continue to have problems. And here is a schematic about what happens. Excuse me. When the brain sees uncertainty and it sees risk, it could lose something. Understand, to the caveman brain, losing means death. Now you understand why you're so adverse to losing. And when that losing is there, literally your instincts are going to cut off data going into the higher brain. That's your thinking brain. It will be disabled. It will not be there, and it will act through the emotional brain, and particularly the amygdala, through the fight-flight process, and that's what defines your trading. Our key is to produce a brain that looks like the one on the left, where you see it blue, you see it calm, and the thinking brain is operating under uncertainty, but that takes training. So that's really what it boils down to. And the real question is pretty simple. Well, what are you going to do about, because if you recognize that emotions are biological in nature and inescapable, you have to start recognizing this illustration right here, where you have this really up-to-date 21st century man driving the brain and all that kind of stuff, and it looks like he's in control. But then in the back seat, there is this little caveman guy. That's the instinctive emotional brain. And it's just sitting there and it's being ignored and pushed around. And you think, oh, it really doesn't matter. I'm just going to push it around. And all of a sudden, when it triggers, when it starts experiencing uncertainty and risk, understand it's looking at it as threat to life. That's what it's looking at as. And all of a sudden, boom, the emotional brain hijacks the thinking brain, that smart, dapper looking fella, and all of a sudden you're doing really crazy stuff. The thing is emotions are not psychological. They are biological. They literally are biological action potentials that coordinate action between the environment and you. And until you grasp that and recognize that this is going to have to happen, how do you do that though? How do you do that? It starts with emotional regulation. The first part of my courses and my work starts with the relaxation response. What we want to do is train you so that when you're engaging uncertainty, stress, what you do is you trigger to relaxed states rather than to stressed out states where fight flight's there. And breathing and muscle tension are part of the way an emotion arouses you and gets you ready for fight, flight, or aggression. That's what happens when if you took a mirror tomorrow, a video camera, and watch yourself trade, it's kind of embarrassing. You see a lot of tension. You see yourself holding your breath. You see your jaw twist. You see all sorts of stuff. That's all emotional arousal that you need to calm it now if you want to have the mind stable as you enter the uncertainty of trading. So you get that, you go, okay, these are there, they're inescapable, and that you can actually train to cut it off before it gets ahead of steam. And in my work, I call that bellows breathing and muscle relaxation. What you're doing is when you're triggered to a high emotion like an anger or fear, you stop breathing and taking air to the lower lobes of your lungs. That's on both these models illustrations, that's the bottom part of that lung, and everything goes to the top part of the lung, because when you are no longer taking air to the lower lobes of the lung, you're no longer producing oxygen to the brain. You don't need the brain. You need to fight or flight. Yet, if you start breathing air into the abdomen, using your abdomen kind of like a bellows, and pulling air in, and then allowing it to expand to chest, and then releasing, and then relaxing the tension in your muscles, what you'll discover is you can manage the intensity of the emotion so that as you stop it from arousing. Very important, because at a particular trigger point, a switch goes off, and the emotion is no longer getting ready to act. It acts. And it does that by pouring chemistry cortisol for fear into the bloodstream, and suddenly your mind's not fit to trade. This is not a standard sensorial pattern the way we came stock. It has to be trained in the presence of fear, in the presence of uncertainty, to be able to separate the uncertainty from the fear. And then once you do that, the next thing you have to do, we teach mindfulness because it's a critical skill. Because right now, everybody thinks, I am scared, I am this, it's too much, I'm going to lose, I. And that's not true. What's happened is the observer that you are of the self has fused to thoughts. What we want to do is we want to take your awareness, separate it from thoughts, so that you recognize that you, as an observer, and your thoughts are not the same. You and your beliefs are not the same. In fact, you don't have thoughts and beliefs. They're creating you and your experience. So the key is in observer mode, you begin to see, oh, this is the way the brain initially, its potential originally got organized from potential into a constructed self. And that's what you've been calling I. And what I'm saying is that's going to have to change. You're going to have to reorganize the potential that you are from the original adaptation before you could even think to a new brain, a new mind that interacts with uncertainty very differently. And it starts with the observation. Now, that bears repeating. I want you to hear it. You and your thoughts are not the same. Yet, I can't tell you how many times I've had it. How many times have you had dread thinking about, oh my God, am I going to lose? Am I going to lose? Am I going to lose? And here's that I word. The thing is, instead of noticing, oh, I have dread, I am noticing that I'm triggering. And I need to get to that fearful side. That's part of me, but it is not me. Or the resentment after taking the loss, I'm going to get it back. I'm going to get it back. Do you see what it would be like to be able to step back out of that and recognize that's not you? How do I need to respond to the loss? How do I need to respond to the victory? It's very different than the way that we've been doing it. It's an adaptation. Your existing is this adaptation that does not work in trading. It's not like it doesn't work in other areas, but it doesn't work in trading. So this is just the self that you brought to trading is just one potential organization of you. Okay, and this is the thing, is that it is time for you to start taking control of how the brain organizes the emotional programs that give rise to the mind. That's the big deal. And it's kind of like we'll just go on. So what we're talking about, when you're in observer mode, you begin to realize that the beliefs you have are actually assumptions. They're no final beliefs. And in trading, we're looking at not good or bad beliefs, we're looking at ineffective and effective beliefs. An effective belief allows you to extract more capital out of the markets than you give back in. Unfortunately, beliefs, if they're not observed as, oh, these are assumptions that have taken on the power of truth, suddenly they become the truth. And you keep forcing, and the trading gods just don't care. What you're doing is saying, something, I need to reconstruct my beliefs about my ability to manage uncertainty. That's the big deal, friends. This allows you to imagine your mind as a governing committee. I want you to think about that, is that literally within what I would call the committee of the mind, it is something where there are constructive forces, voices, there are destructive spheres of influence, where basically you as the observer, you as the CEO of that governing committee have been asleep at the wheel. And what you're now doing is saying, something, I'm waking up, I'm seeing an out-of-control mind, and I need to start getting it in order for effectively performing with uncertainty in trading. That is what we're after, friends. And the very first thing that you really get into, and I think one of the reasons that most people don't like mindfulness work is this, is you come in contact with the internal commentary. That little voice that sits out, there's an internal commentary all the way going on, and you'll notice that it's judgmental. You'll notice that it's saying critical and judgmental things about you. The most common one in trading is you're not going to make it. You're not going to make it. You've got to prove that you can do this. You're just not going to make it. I can't tell you, this morning before I came on, 2 clients had the same thing. Okay. And what we have to do is, have you ever tuned into it? It's also called the historical internal dialogue. Absolutely necessary for you to clue into and to recognize that's not you. That's just simply one organization of a mind that has not been examined, and you need to examine it. Now, it is here in this mind being created from the brain that these programs of the brain they're the ones who become voices in the mind. And what you're going to discover, there's lots of influences. There's lots of power struggles going on within the mind. One of the best ways of understanding the mind that I have ever found is the children's movie, Inside Out by Disney. It depicts them as emotional programs, and you begin to see that, oh my gosh, there's a group of emotional programs that have been given voice, and it's creating the mind of the little girl. It's a great film. I wish you would watch it. This internal dialogue, though, this is the organization of self that keeps you stuck. This is where you find the inner critic. That's when you have self-doubt, or you're being tempted, being urged, wanting to jump into trades. That's the inner critic. It's a very destructive element of ourself. It's known by various things in different cultures and different spiritual paths, but the main thing, it's very destructive. It's not like it's bad, but it's destructive. It's just in the same way as that the Hindu God would have both his creator, sustainer, and destroyer. You begin to see that there's different ways of understanding this. And in trading, if you let that destroyer side of yourself take over, you're going to have really serious problems in trading. We want to do something different. But this is how your brain initially learned to deal with uncertainty. It inherited it all the way back from the African savannas. There was all this transmission for us because, ultimately to stay alive was a real challenge, and it was easier to look at uncertainty as something dangerous rather than something to be managed. We would assume that a saber-toothed tiger was behind every bush that we saw out on the Serengeti, when in fact only 1 in 10,000 were there. But it got wired in as a trait, and we carry that into trading. The deal, though, is the uncertainty is exactly what you have to be able to become comfortable with. Trading forces the evolving trader to redesign the self for management of uncertainty. This is just where it's at. And to do that, you're going to have to find the self-limiting beliefs that are driving your perception and your performances. And friend, there is no rocket science here. The self-limiting beliefs fall down in the category of inadequacy. I'm not good enough. Not mattering. I have to make a whole bunch of money to prove myself. That's the alpha song. I don't deserve easy money. I don't deserve it. I have to work hard. Scarcity, what I have is going to be taken away from me. Or powerlessness, where I'm out of control. And if you've ever been in a trade that's just going sideways on you and all day around, that's powerlessness. Those are the ones that are on a subconscious level that you have to call implicit beliefs that you have to pull forward and begin to challenge and to recreate a completely different self. Then, there's been a lot of bad news here. It's kind of like bummer news. Yet there's some great news. The good news is that you can intentionally awaken the emotional programs needed for uncertainty management. They're sitting there. They just have been pushed away. They've lain dormant. They have not been cultivated and brought into the working awareness of your brain and your mind. This is where you find the discipline of a ruler, the courage of a warrior, the self-soothing of a caregiver, and the impartiality of a sage. They exist as potential living within your genome. Your job, if you want to be a successful trader, is to start isolating this and intentionally bringing them up and having that mind to work from rather than the mind that you brought, the historical mind. So it really comes down to, what do you really want to do? Because I use a process called memory reconsolidation. That's the neurobiology of it. I actually call it memory enrichment, to where we actually take real memories of times where these particular programs that I've discussed are present, and we learn how to enrich them and to summon them up at particular moments in time. Okay, that's the big deal. In doing that, you begin to reorganize as an intentional mind rather than a historical mind. Not the ones that you came with, but you are then practicing going, okay, I need the discipline of a ruler. I need the courage of a warrior. I need the self-soothing, not the beating up of a caregiver and that impartiality of a sage. That is what creates the probability-based mind. That's what's necessary. So what does it look like? With training, these programs that interact with certainty can be brought. Now, if you take a look at a movie like Lord of the Rings, those emotional programs are presented as archetypes. Frodo, dead center, was probably the strongest individual there because the fight for him was inside the head. Most of the other people, the fight was outside with all the critters. But the thing is in there you find Sam, who takes care of Frodo. You find Aragorn, a ruler. You find a sage, and you find all these elements working together as symbolic representation of your brain. This, friends, is what has to occur. And big time, you're no longer trying to win, control the outcome. And you're no longer trying to make things happen because you're discovering that patience is also a form of action. You actually move from the deception of controlling outcome to controlling the mind you bring into the management of uncertainty, controlling the mind that you bring to the moment of performance. Friends, this is the edge. You're no longer trying to control outcome. You're controlling what you can control, the mind you bring to the moment. This is the power. And ultimately, those urges are going to always be there. The struggle of being able to manage that intentional mind will always be there, and you're going to have to really push and work to get them done. So there you go. In this scenario, winning only becomes landing on the right side of probability. Losing only becomes landing on the wrong side of probability. There's no need to get excited by winning. That's dangerous. Or dejected for losing, because what you're doing is you're saying, you know something? The mind that I brought to the managed probability is really the only thing that matters. How did I perform? That, friends, you can control. And it's kind of like the surfer. There's no way he's going to control that wave. However, with skill, what he can do is he can learn to surf with that wave, use the power of that wave to get a heck of a ride. That's what happens here. He's not trying to control the wave. He's trying to say, show me what you want to give me. Same thing in trading. You have to have an emotionally stable mind that's really focused on these archetypes to be able to get it done, though. So that's what happens. And the real question is, are you ready to learn these skills? And truth is that most people have to get their head banged up pretty good for a pretty long time, 3, 4, 5 years before they start coming to their senses and recognizing it's not going to work. So I have an invitation for you. First of all, if this is your first exposure to me, what I suggest you do is to go to the website. It's the one down there, okay? And maybe we get it typed in and get our free ebook. Just begin there to be able to say, okay, I want to check this guy out. He's beginning to make sense, and he's beginning to explain this in a way that I understand and I can see happening. Now, if you've been around and if you're saying, you know something, I really need to get something done about this. I'm tired of this. My invitation is for you to really consider the group course that's starting in June. And that group course includes 5 group meetings with me in a webinar format, and they're going to be recorded because we get people all over the world, and nobody can meet at 4:30 Eastern time. And you receive recordings of all the recordings, and it's a virtual classroom that you have access to 24/7. And that the first class literally starts with a review, and we would have expected you to have already done the emotional regulation work, and it starts in June. Okay, and it can be brought into 5 different payments, or it can be paid in full. It really doesn't matter. That's something that you can find just simply, any way you want to. And also, if you sign up early and by 2 weeks or so before the class, what we're going to do is we're going to give you $199 value, our emotional regulation workshop, not because I want you to join, but I want you to be prepared. I realize a lot of people will not start until, they will not join until the very last end, and you're already 2 or 3 weeks behind by that time, okay? So you can't do it. So by the way, that free ebook is on my website. Okay, so just go there and get it. If you're looking at me and beginning to go, oh my God, where's this guy coming from? Read this, the free one, take a look at it. But meanwhile, take a look at the group course. It's a powerful, powerful way of learning the skills of what I've talked about here. Powerful way. And what I want to do is I'm going to try to help Sherry get back on time. Okay, if you have some questions, I'll answer a few of them. Okay. Sherry, that was very funny, wasn't it?
Yes, it was. Thank you. I'm so sorry you had to wait.
That's okay. So would we see the questions on this end?
Yes. Everybody,
Okay.
you can now type in there and get your questions in.
Okay. Or not.
Oh, well, sometimes people explain it so well that they don't have questions, but we did put Trader State of Mind / Trader State of Mind, mytraderstateofmind.com / free ebook. So go there and get your free ebook. And you should absolutely get in on this. I have it on good authority that this is the man you want to take your emotional training from.
Aha. Well, I don't know who said that, but I think they're one of my best friends. There you go. So anyway, I don't see any questions, and I also have a 3:30 engagement. So what happens is if there are no questions, I want to tell you, I wish all of you well. I really do, and I would invite you tomorrow to really take a look, take a mirror, and just watch yourself as you trade. It's spooky. You will see a person that you don't recognize. And what you're looking at is you are looking at the emotional reaction that you're having to uncertainty. You're going to see tenseness. You're going to see your pulse is going to be beating. You're going to be breathing very slightly and stuff like that. So anyway,
Yeah.
do that. And let's take a
You
look.
do have one question here. How do you identify self-sabotaging beliefs before you're in the middle of it so that it can be worked on ahead of time? Like, how do you isolate that?
Well, the short answer is take the group course. The longer answer is what happens is you first notice it saying, I am sabotaging, and you begin to ask the question, what's behind that? What is it serving? And most likely, if you have self-sabotage, there will be a lack of feeling that you deserve good money.
Yeah.
Okay. And what you're doing is you're saying, I need to start getting in that. Or other people, I've worked with traders who, and one particular guy, he worked with a high 6-figure account, and every time he went into 7 figures, he would lose back down into high 6 figures. And ultimately, what we discovered is there was a rule in the family that nobody is worth $1 million. And that was just drilled into him. And he grows up, becomes a trader, and he didn't see it operating. And, we discovered it and we were able to deconstruct it. And, he went on to no longer be limited by that belief that he learned, probably by the time he's 3-4 years old. It would have been totally outside of working awareness, but it was operating in his trading mind. So that's,
well, there
that's
you go,
the beginning.
Rakesh. Yeah.
There you go.
So, and that's what he just said. I don't even know if I have self-sabotaging beliefs, but the account's not growing. So possibly that's something that should be looked at. Get that book and get in on that training, I would say. Huh?
There you go. That's what I would
All right.
encourage.
All right, so, Randy, I really appreciate you coming again and being with us.
It's been fun. It's been a lot of fun.
And give my best to Dolores. She puts up with a lot from me.
There she is. I'll say, I'm looking at her right now. She's saying hi to you too.
All right. Well, you guys have a great day. Thank you so much again. And I hope you'll join us again soon.
Thank you. Take care.
Have a good one. Bye-bye. All right. Wow. We're almost ready for our last speaker here. Let's see if you can see my screen. Yes, that was Randy Howell of Trader State of Mind. Please take advantage of his offer, his free book, and get in on that training. I know that you will not regret it. So our next and last speaker of the day is Brian Rehler of Trader Shark. He's bringing us Green Dot, Green Candle, Go, and I can't help it. And Brian, you can smack me later, but I'm thinking Dr. Seuss. I don't know why, but he's going to bring that for us. Let me just introduce him, and then I'm going to make him our presenter for the day. The last speaker of the day. You can laugh a little bit.
That's okay.
Brian's a full-time trader and technical analyst of the E-mini S&P futures. E-mini, is it E-mini?
The E-mini.
E-mini. The
E-mini.
E-mini. Okay, well now you guys know that I'm not like up on all the trader, terminologies, but he brings over 30 years of financial market experience. Trader Shark simplifies the complicated futures market with common indicators. Hello, Dr. Seuss. Formerly an Army officer and helicopter pilot, Brian learned the importance of patience, discipline, and commitment to a sound trading plan and execution of that plan. And I bet you also bring a never quit to the table. So I'm going to turn it over to you now, Brian. Let me make you the presenter. And I'm going to also give you organizers so that you can see the questions. Make presenter. Yes.
Let's see which screen.
I don't know, you guys. I've been doing this for a while now, and I still think that this is just not intuitive for me. I don't know why I constantly have to struggle to get wherever I need to be to get you guys your, all your permissions. Anyway, I can see your screen now.
Can you see Trader Shark, or do you see my desktop?
I see your desktop and I see Trader Shark. So make sure you go full screen on that.
I have a dual monitor. I'm on the other side.
Okay. So when you pull it down and you choose what you want to show, it's going to ask you which screen to use. And I usually use my second screen clean. I don't know, I just think it looks better. I want to thank everybody who's here with us today. We still have a really good crowd with us today. There we go. All right, take it away. I'm going to mute myself.
Well, thank you. You can see the Trader Shark.
Holler at me when you want your, yes, I can. Blue screen, awesome. TraderShark.com. And just awesome. Holler at me when you need your link in the chat.
Sounds great. Thank you, Sherry. I appreciate it.
Thanks.
Isn't that fantastic? Rande Howell. I mean, I've spoke with Rande many times in the past, and it was spot on. Great to hear. And I've never heard it called Dr. Seuss, but I do know that trading the markets can be complicated, can be confusing. So I thought I would kind of dumb it down a little bit and make it simplified. It's not as easy as Green Dot, Green Candle, Go, but it is visually. We're auditorily and visually motivated, and so when we see the green dot and the green candle, you've got a nice opportunity to place a trade. So let's get started here. TraderShark.com. Thank you all. I got a lot of people here that have been here, that have seen me in the past, been trading for many years. I won't show you my age or anything like that, but let's see. We're going to learn to day trade the S&P E-mini futures. And what that is it's simply a smaller contract than the actual S&P futures. We won't get into too much detail there. I'd be happy to answer any detailed questions you want later on. I want to thank Sherry and Traders Exclusive for inviting me to present here. TraderShark.com, please feel free to check us out. Green Dot, Green Candle, Close. I'll have to wonder if I want to change that title. I don't think so. Disclaimer. So you've seen this before, and I'm not a financial advisor. I'm not giving stock opinions. You can lose some, all, or even more than what your initial investment is. So be careful before you make any trading decisions. Make sure that you consult your financial advisor or your broker. Past performance is not an indication of future results, and we are an educational company only. With that being said, what are we going to learn today? We're going to learn to evaluate pre-market conditions. You don't hear about that very often. And then we're going to make sure that we stay on the right side of the market as opposed to the wrong side of the market. We're going to identify some key support and key resistance levels, and don't you know that those are going to be colored as well, green, red, and blue. Think before you click. This is probably one of the more important things, and I'm sure Rande would agree with me on that. People tend to overtrade. So we want to think before you click, and then it becomes a subconscious trade. Use common indicators inexpensively. I'll tell you what they are. I'm not going to tell you the settings, but I'll tell you what it is we use. Who is that guy wearing a suit? I don't wear a suit coat anymore, but that's me, Brian Rehler. I've been trading for over 25 years, stocks, options, futures, Forex market. I initially started trading the bond market. I don't know if you ever heard of Benham Capital Management Group, and I thought making 4 and 5% a year was fantastic. And then I had one of my cousins came up and said, "Hey, have you ever tried the futures market?" I go, "Futures? What's that?" And so I kind of liked it. It's, for a lack of a better term, they call it the cocaine of the industry. It's very fast. We are scalpers. We're not swing traders, and you're going to see that here as we go forward. I was a mortgage broker for over 20 years down in Orlando, Florida. I was a former U.S. Army officer as a captain, and I was a medevac helicopter pilot in Desert Storm. And I'm also a professional life coach. I was trained by one of the best in the industry. So what do we have? What's our objective today? Create a core group of like-minded traders. In other words, when you're in the room, I went to so many rooms before I started trading, and I took what I liked and took what I didn't like, and I wanted to simplify it and make it easier for everybody. And I want people to be able to share their thoughts and ideas in the same room, and that's the type of environment we have. Apply commonly used indicators. You know, it's not like you're spending a lot of money to come into a room and where you find yourself committed to those rooms because you spent so much money up front. Come on in. If you like it, you can stay. If you don't like it, you can leave and you haven't invested a whole lot of money. By the way, we do have a free trial coming up this Friday, and I encourage you all to come join us. And you do it inexpensively, right? I mean, why would you want to pay all that money up front when you can do this stuff at home? I would encourage you to get into a group, whether it's our group or some other group, to at least you can voice your opinions and get those out there before you place a trade. Help reduce one of the biggest injuries to most traders. Again, this is something that I think Rande may endorse: over trading. Right? People come into the room, they used to trade 30 or 40 times a day. When they step into our room, anywhere from 0 to maybe 3, maybe as much as 10 times a day. So we want to avoid that. We also want to slow you down and think before you click. I do speak a little bit fast. I apologize. I guess that may be my training that I've done when the market starts moving fast. I do tend to talk a little faster. I'll describe everything that we do in the trading room. Provide a unique training environment in a live trading room for both new and experienced traders. We've had a broad range of professional traders, people from brokerage firms to somebody who doesn't even know what a future is or what a future contract is. Mind sharing. What is mind sharing? You never hear about that in trading. Well, people say, you know, if trading is so, I don't want to say easy, but if you're making so much money trading, why do you want to teach others? That's a great question, and I think everybody should ask that of any mentor that you're going towards. I'm an extrovert by nature. Maybe you couldn't tell by my expressiveness and how I talk, but you know, and I'm locked behind a computer for 2 hours. I enjoy trading. I mean, it's my passion, but at the same time, I need to take a break after a little bit, and it's great to listen to what other people's comments are and their constructive feedback, and we're always learning. So success comes from the team approach. I like it. Some of the people I've trained actually have come and broadcasted for me, and we've got some great traders in there now. Educating traders about the market is rewarding. I mean, I see this in the success when somebody says, "Hey, I just made a run for so many ticks or so many points," and I always very encouraging of that. Trading alone can be boring. I mean, we all know that, but then you've heard that a boring trader is a good trader, and isn't that true? I mean, we want to try to you'll always hear trade and avoid using your emotions to trade. Well, you know, it's easier said than done. I mean, just like Rande said, you know, you can get a camera and monitor yourself, get a blood pressure indicator on your finger and watch how your pulse increases when you enter a trade, when you're making money, when you're losing money. That's an outstanding reason to certainly go over and listen to what Randy's got going on. Keep it interesting and informative. I think that we're very interesting. Always learning from the questions being asked. So let's get into this. Profit sharing, I also encourage giving back to your community. Find some of your local organizations that you want to support. And when you are successful, contribute to those organizations. I like the Russell Home for Atypical Children, Clean the World, getting soap and toothbrushes and things out to those organizations and those sections of our economy and country that need those things, okay? A Wounded Warrior Project, again, whatever speaks to you, I highly encourage you to support them. So let's take this step by step. After you place a trade, have you ever felt like this? I mean, it's not your fault. It's the broker's fault. It's the software you're using. It's the market. It's the market makers, right? I mean, when you're buying and selling a house, it's buyer's remorse, seller's remorse. When you buy and sell stocks or futures or contracts, it's the market that's causing these things, and it's never you, right? But in the meantime, if you had confidence in your trading system, do you think you would have these type of emotions? So what we want to do is we really want to take control of our emotions by having a sound trading method, knowing your entry point, knowing your exit points, knowing your loss potential, your risk reward, and what you do when you lose a trade, because we're all going to lose, right? And then we're all going to win, and then we're all going to break even, and you're going to go up and down in your account. So if you want to harness those emotions, why do we feel like that? Well, we're told that approximately 90% of all traders are consistently lose money. True or not? Probably higher than that. Why? Because we're trading against supercomputers, algorithms, big money, institutional traders, hedge funds, banks, and more, right? So we're the little guy. That's why I kind of like scalping. We take little tidbits out of the market, and then we're all in cash by the end of the day. I like that. That speaks to me. If it doesn't speak to you, then you may be more of a swing trader or more of a longer term trader. And that's why there's such a market out there. We have these options for us to get into. So the proverbial question in any market that you're trading is, hey, how do we win? How do we become profitable in a market that is geared against us, right? You think of it like this. Some of the psychology books are the absolute best trading books you can get into. Why? Because if it's going to hurt somebody in that trade direction, that's probably the direction the market's going to go. So the trade direction that hurts the most traders is the direction it's going to go. So now you have to have something that, a nuance, if you will, that you can trade in that direction. And that's why there's so many trading rooms, over 1,400 trading rooms out there. Everybody's got a little niche. And I'd say the majority of rooms, successful, non-successful, irrelevant, you've got to make sure that it speaks to you first. So that's why I encourage you to check us out. We need an edge, or a nuance, if you will. We need to take advantage of the nuances within the market. We need to do it with consistency over and over again, which is called unconscious competence. We can talk about that. I'm sure Randy would talk about that as well. That is why there's so many trading rooms out there. In other words, that's why we created TraderShark.com. I'll show you the nuances within the market, or the nuances that we use. And William Gann, if you feel free to Google him. Time is the most critical factor in determining market movements. Now, whether you're referring to longer time frames, swings, or day trading, there is definitely a relationship between time and price. William Gann, right? We talked about pre-market evaluation. What are these blue lines or cyan colors? This is pre-market. This is before the market opens. If the market opens at 9:30, what happens before? There's a Globex market. What? The market trades before we open in the morning? Yes, it's called the Globex. Then it's on the S&P E-mini futures. Why? When we close at, let's say, 4:15 in the afternoon, then it shuts down and opens back up. What next world market opens up? The Asian market, about 7 o'clock at night, right? And then what happens at around 3 o'clock in the morning? I'm talking Eastern Standard Time. I'm down here in Florida. 3 o'clock in the morning, the European market opens up. Well, the European market closes down by about 11 o'clock US time, right? Eastern Standard Time. So if we know the range of the pre-market or the Globex before the market opens in the US market, do you think that we may kind of get a heads up as to the direction our market's going to go for the day? Today would be a perfect example. So a narrow Globex range may very well indicate the future, or today, a narrow US market range. However, if we have a broad Globex range, what was today, 18 points? The Globex range was 18 points before we came up. Oh, you know what? My apologies. That was the opening range today. I think we had 56-point Globex range. So when we have a broad Globex range, you've got a high probability with a narrow opening range here. You can kind of see it. This is the opening 15-minute range. We'll talk about that a little bit more later. The Globex range is wide, meaning a broad range, a higher high and a lower low. Take that spread, that difference, and all of a sudden you look at the US market and here it was only 18-point opening range, then we're going to get a breakout. We don't know what direction we're going to break out, but we do, we want to poise ourselves in the direction of that potential breakout. So it happened today as well, right? Broad Globex range, and we get these breakouts. If you get a broad Globex range, again, the overnight market before 9:30 in the morning, and you get a broad opening 15-minute range, you know what? High probability you're going to have a consolidating day, maybe a good day to go golfing. What I call GFX index, golf, fishing, or skiing index, golf shopping or skiing index. Go out there and do something you enjoy doing. If you've got a broad Globex range and you've got a broad opening 15-minute range, take a break for that day. Master the basics and you will master the art. Breathe. Stand up and breathe. Again, people tend to get all tense. They hold their breath. They're into a trade. They bite the edge of their computer. Whatever you saw in those previous pictures, stand up and breathe. If you're not breathing and you're holding your breath, then your brain gets foggy and clouded. Stand up, drink water. You'll hear me say that in the room. Stand up, drink water if you have to. I will say that and mean it. You need to keep active on this. We only watch it for 2 hours during the trading day. Why not be the best you can be at that point? This white line in the shark down is going to be dashed, ... across. White line is the opening price. The yellow lines, again, this is something you're going to see on Friday if you come and join us, is the opening 15-minute range. I want you to notice they are dashed lines here, ... opening 15-minute range. At the end of the 15-minute range, those lines go permanent, boom, for the day anyways. And it gives you an idea if we're going to get a breakout of that opening 15-minute range or if we're going to stay consolidated. What are these magenta dots and orange dots? You're going to have to come in on Friday to find out what they actually are. Those settings, I'll tell you, and I'll show you how to calculate them. And what I want you to do when I tell you where those locations are, you're going to simply add and subtract them from the opening price. And those are the key areas that the market tends to work its way towards. Listen to my words. The market tends to work towards those support and resistance areas. How do I know? Ask me. We're going to watch it, and as you hit these outer areas, I don't mind telling you, this first one here is the hourly range low. That first hour of trading in the day, add and subtract that from your opening price. You can do that in your stocks, you can do it on futures, options, whatever you want to do, and you watch those areas tend to be magnets for the movement of the market. Market conditions. You've heard this before. Well, if you've been trading before, you've heard this before. 4 possible answers, right? You've got a trending up market. You've got a trending down market. You've got a non-trending market, consolidating, accumulating. Consolidating and accumulating are not the same, but I use them in the same line because if you're opening in the range, it may be consolidating. If it's in a run and an uptrend and it consolidates up there, it's actually accumulating to either push higher or to reverse. So won't get too detailed, but what's the fourth one? What is the fourth one? Stand by. Uptrend, higher highs, higher lows. And there's those green and red candles that Sherry likes to talk about. Downtrend, lower highs, lower lows. You see this all the time. This could be any time frame. This could be 5 minutes, it could be 5 seconds, it could be 5 days, it could be 5 months. You can identify a trend. Where are we right now? Did we break any key support levels today by the pullback? I think we were down, I don't know where the market ended. Let's see, market's still trading right now. I don't have it in front of me, but I know that we were down at one point like 565 points in the Dow. And then the last I looked, we were down only 250, so we had a nice recovery. But that was still a downtrend. Lower highs, lower lows. Consolidating and accumulation, again, they are separate. I encourage you to read about that. Consolidation here in the center, accumulation would be gathering price action at a certain level before it goes higher, and that would be what we call a shark attack trade. You'll notice at tradershark.com, our trade setups are oceanic themed. Hey, that's where we get our little bit of interest in your trading during the day. We got wave trades, we got shark attacks, we got hook patterns, all kinds of fun stuff like that. So accumulation phase would be as the market's moving higher, accumulates at a certain level, and what does that do? It consolidates like this, but it encourages a lot of the oscillating indicators to roll over. And as those oscillating indicators roll over or turn down, The market's preparing to burst higher. And I'll tell you some of the tricks on that type of, I shouldn't say tricks. I'll show you some of the methods we use in order to gauge getting into a position to go with the trend. So market conditions, this is the other. I know you're all like, what is this other thing he's talking about? Have you ever seen this pattern? Interesting, right? This is called a megaphone pattern. The megaphone pattern is something that creates higher highs and lower lows. Again, this could be on stocks, futures, options, Forex, whatever you want. These patterns are very difficult to trade. That's why we need supporting indicators to help identify this so that we don't hurt ourselves and we don't try to get into this shakeout. It's also called a search and destroy. Write these down and go ahead and Google search and destroy algorithms, inverted wedges, or broadening tops. No, that's not my son, but I just thought it was a cute picture to throw in there. This is the way we feel when we encounter a megaphone pattern. The market can stay irrational longer than you can stay solvent. Love this. This came to me from one of my traders by John Maynard Keynes. Write this down. Think about it. The market can stay irrational longer than you can stay solvent. We need an edge. We need an edge of an indicator that will tell us, hey, this is a great opportunity to get into the position. How do we put it all together? This is all fun talk, Brian, and we got pretty colors. Well, let's look at some real-time examples. I've actually got a screenshot from Monday, Tuesday, and Wednesday, but let's look at some older charts because they don't change. What are key support and resistance levels? Pivot levels, well, they're great. I mean, there's floor trader pivot levels. There are the common trader pivot levels that you'll see posted on the CME. You got different companies out there have their own pivot levels. Okay, we got pivot levels. Hey, Fibonacci levels. That's kind of an area that is also multiple Fibonacci levels, and they tend to consolidate, and those can create support and resistance levels. Again, you can trade all of these if you like. Key number levels. What are key numbers? Well, the hourly range high, hourly range low could be a key number. Big round numbers, right? 0, 0.25, 0.5, 0.75, 0.375. What's that? That's like 3/8. That's another important number to watch. Consolidating numbers. What is that? A consolidating number is kind of what I use. I'll take a multiple numbers, and where they are consolidating or where there's more numbers at that area, that is an area of interest to me because we've got day traders, swing traders, longer term traders, daily, weekly, monthly. All of those different traders have different levels they're watching. When those are consolidating, do you think it's an important area to watch? Prior highs and prior lows. This is very important to watch these because it may not be the way that you think it is. A lot of people try to short at prior lows. I would say be very careful trying to do that. Shark bands. This is what we use in our room, shark bands. I calculate them every day and I post them out to all Shark Den members every single day. So Trader Shark uses shark bands for support and resistance levels. No surprise there. Jesse Livermore. Throughout all my years of investing, I found that the big money was never made in the buying or the selling. The big money was made in the sitting or the waiting. Wow. This is another one. Write it down. If I put it in the slide presentation, this is an important quote. The waiting. Why? Everybody wants to buy, everybody wants to sell, but if you're sitting on the sidelines and actually waiting, because being out of a trading position is actually a trading position. Well, I know we're saying 2,700, this is an old chart, but the patterns are the same. How do we know where to buy or sell? I like the red candles, I like the green candles. Underneath, we've got a momentum indicator. I want to talk to you about that in just a moment. Opening price, what did I say? Dashed line is opening price. 15-minute range, we've seen this before. 15-minute range over here, the opening 15-minute range. Why is that important? So we know, remember in the trading day, the opening 15-minute range, I don't tend to trade very often. And the first half hour of the trading day from 9:30 until 10 o'clock, again, Eastern time, tends to be what they call amateur hour. I know it's only a half hour, but they call it amateur hour. I mean, you can read these books. They tell about it's like taking candy from a baby. This is where they're taking advantage of a lot of the newer traders and ripping against them. I do prefer to sit on the sidelines, generally that first 15 minutes to a half hour. I may trade a couple situations, and we'll talk about that in the Shark Den when you come and join us. Aside from that, 15-minute range, cautionary, break out of the 15-minute range, watch 10 o'clock's, we have what's called a time chart and just watch for the potential reversal zones 10 o'clock and 10:30 as to whether the market's going to consolidate, continue, or reverse. Ooh, these are the shark band, Sherry. These are the colors that you were asking about. Red, blue, green. You know, we are visual creatures. Do you think red may mean to sell or be cautionary? Maybe we're making a trade up to the red band. The blue band itself is kind of really close to opening price, more of a consolidating area. And then green, you think if the reds sell, green may be buy. It's not that simple. It's not just buy at the green level and sell at the red. So these are key areas of support and resistance that price action is moving towards, and we're trying to trade off of those levels. Okay, so we're getting an edge. Ooh, the green arrows. The green arrows do not print in the shark den, but the green dots do. So we talked about this. Green dot, green candle, go. Is it that simple? No. I'm telling you, this is as transparent as I can be. They're going to tell you that trading is easy. It takes work, and it takes a sound trading method for you to be successful. So if we get a green dot and a green candle, I highly encourage, no matter what you trade, to have a higher time frame chart and a lower time frame chart. A higher time frame chart is we call an anchor chart. It's oceanic theme terminology. What a surprise that is, right? Anchor chart and a signal chart. If this is an anchor chart, do you think that we may want to look at our signal chart or our lower time frame chart to get a trade in that direction? The answer is yes. I'm using the terminology now. I want you to be familiar with it. So when you come in on the free trial on Friday, you go, oh, I heard that. So anchor chart, higher time frame chart, signal chart or trigger chart, lower time frame chart. Let's give you an example. A higher time frame chart could be a weekly chart. A lower time frame chart could be a daily chart. A higher time frame chart could be a 4-hour chart. A lower time frame chart could be an hourly range chart. A higher time frame chart could be a 10-minute chart. Lower time frame chart could be a 3-minute, maybe a 5-minute chart. Get a higher time frame chart going in that direction, and let's wait for a signal chart or a trigger chart to line up in that same direction to take advantage of that trade. So far, so good. Okay. Red dot, red candle. I didn't say anything about red dot and red candles. Well, it goes without saying. Red dot, red candle, go. This is our anchor chart. This gives us a setup in a trend direction. Do you think if the anchor chart's set up down, right, short, and our signal chart hasn't fired off yet, then we may not get a trade. But do you think that over here to the right, our signal chart may be lining up for a trade? Yes. Green dots, green candles, red dots, red candles, great stuff. We have our opening range, we have our shark bands, we have our green dots. Now we have a system, right? We just need to know where to enter, where our profit targets are, and where our stops are, and when do we get out if we're wrong? We will be wrong. I absolutely guarantee it. We will be wrong sometimes. The objective is to be right more often than you're wrong, right? Simply said, these trend lines I use on my momentum indicator. Now we call these a wave trade. A higher time frame lines up, the lower time frame lines up, you now have a wave in that trade direction. Ooh, what are those? Those are not waves. Those are moving averages that we have modified. If you are in a trend direction, do you think it's a good idea for us to wait until we get above a shark band and we're above our, I don't want to say a wave, but our colored lines here, for us to continue higher? I think it'd be a great idea to stay above it, you stay long, get below it, you stay short. Here's some examples. 2 and 6, what is that? In the futures market, the tick chart is, one tick is $12.50. Well, that's not a lot. 2 ticks, 2 times $12.50 is $25. That's not very much, but I can tell you this, a lot of traders come in and try to trade and they can't even make $50 a day. So I want to show you how we safely go in. Now, this is not on every trade. Some trades you're going to get 1 point, 2 points, and 3 points. What is 1 point? 1 point is equal to 4 ticks. Oh my gosh, Brian, now my head's swimming. I can't keep up with you. 1 tick, $12.50. 4 ticks equals 1 point. 1 point equals $50. So what I said earlier is we have some trades that are geared. The shark attack trade, for example, the target levels are 2 points and 4 points. If 1 point is $50, 2 points is 100. If you get into the shark attack trade, you get 2 points, which is 100, and 2 points, which is 200. That's $300 in one trade. Not too shabby. Same thing. Oh my gosh, this looks way too messy. Well, there's kind of a method to the madness here. The green lines are for support. You get above the green lines and the green arrows, not a bad idea. And then you start to get your green dots to line up. Now you've got a trade direction. If it looks too messy inside the opening 15-minute range, I would agree with you. But once you get outside the opening 15-minute range and you get a pullback, do you have a green dot and a green candle line up to go for a long position? Same thing. They start to get, and it takes, just like any other room you're going to get into, it's going to take you a little bit of time to get used to my tonality, my terminology, and also the trade setups. But I believe that the color, this is my belief system, is the color method helps people stay on the right side of the market. Repetition is another skill. Tony Robbins, one of the world's greatest life coaches. What is this? Well, we've got, did the blue band cause resistance? Well, we think it did, but you're not going to obviously take a short in through here. You got a red dot coming in great, but you don't have your resistance yet over here to the right. Now you've got an indication to go short. Can you see the difference? Red dot, not this red candle, but this red candle go. Nice opportunity. What about over here? Green dot, green candle, go. You're not going to get this full run. I don't get this full run. I may take a little bit of a scalp out here. Make anywhere from what? 25, 30, let's see, 30, 38, $100, maybe $150. Nice move. Wait for the next trade. If you trade 0, 1, 2, 3, 4 trades at 75 to 150 bucks, maybe $300 a trade, not too shabby. Can you lose money? Yes. Can you lose 4 ticks, 8 ticks, 16, 20 ticks? Yes, you can. Try to keep you safe. Follow your rules. Get into a position. Know your exits. Know when to exit. When you're wrong, know your target levels and your stop losses. Move your stop losses. If you're looking for a runner, you'll hear different people commenting in the room. I'm in long. I'm holding for a position. I'm holding for 1 point, 2 points, 3 points. Just listen to everybody. Do not start trading with real money until you've consulted with your broker, your financial advisor, or you at least know your trading methodology, whatever you're trading, okay? What about this? This is a trade, 6, 7, 6, 7, so what, over $300? Not bad. Support level, this white dotted line, opening price. Well, we have rules for opening price too. You've got to learn your rules. More than likely not going to just step into a room and follow exactly what the other traders are doing in the room. You need to learn the methodology and learn how it breathes. I only trade the S&P E-mini futures on multiple time frames, okay? I don't need to, I used to trade the euro and gold and crude. It just got to be so much. Why not simplify it and say, how much money is too much money? I've heard some people say not enough. Well, I would say that that person is probably going to have emotional trading issues when they go to try to exit out of a position. Monday, does this stuff still work even today? Absolutely. This is Monday. Look at this. Here's your trend line cross, green dot, green candle, go. There's your higher time frame chart. Here's your lower time frame chart. Look at the wave. It's called a wave trade. Trend line cross, green dot, green candle, go. Green dot, green candle, go. Now, these trend lines are not drawn, but it's taking enough time. I have time to draw them if I want, or when you get into the room, your eyes will get used to taking these positions. These are called extreme pullbacks for continuation. Tuesday, same thing, same thing. Look at this, pullback, green dot, green candle, go. Green dot, green candle, go. How are we doing on time-wise? We're almost there. Okay, Wednesday, May 19th, this was today. Now, this was only 4 and 6 ticks. This was just a quick screenshot, but look at the setup. Almost identical. Pull back here, green dot, green candle, go. Nice. Repetition, repetition, repetition. If you're looking for excitement, you can get your excitement when you're watching your account, but consistency, even when I take a loss, you will not hear me express any okay, it was a loss. Learned one more way how not to place the trade. So have you ever felt like this? On an island with sharks? I like the one screen that Randy's got on his where the guy's standing there in a suit with sharks swimming around him. Okay, so this is how you get over here for Friday's free trial. Go to the homepage. This is the screen that you signed in today, and go to the free trial. If you'd like to take advantage, Sherry, can you post that Trader Shark link? If you come and join us, what I've got is 25% off whatever you purchase on our website. We're not very expensive. I think it's like $197 a month or $198 a month, and we're giving you 25% off that. The trading manuals, if you'd like to learn, lots of great comments. All of those comments and testimonies you find on the website are all real. Those are all validated. I've got copies of emails where people sent those into me. The trading manuals are good no matter what you trade. They are geared towards the futures market, but it does help you determine what it is you like to trade and what type of trader you are. Do you want to trade stocks, futures, options, Forex, anything you want to trade? And then from a short period of time, do you want to be a scalper and be safe by the end of the day? Do you want 3 to 5 day swing periods, or do you want longer term trading? But please feel free to check that out. How do you get there? Go to the home tab. Same home tab, directly underneath is your webinar special. And I think Sherry's going to post that. It's right there, webinar specials. Oh, and there's a special code. Make sure you input the code WEB, W-E-B. If you forget about that, just type in the word Traders Exclusive. I created 2 different buttons, Traders Exclusive. If you type that in there, or WEB, you'll be able to take advantage of those discounts. And that's it right there. So if you have any questions, please feel free to type them in. I will answer all questions except for the settings that I'm using in the Shark Den. You want the special sauce, you got to come and see us on Friday. And I appreciate y'all being here with me today. Are you still there, Sherry?
Awesome. Very
Yeah.
nice. Yes, I'm here.
Oh man, I didn't mention Dr. Seuss. Now did I? Sorry about that.
A couple of times you did. A couple of times you did. You snuck it right in there. I was giggling through there. I just keep my mic muted so that I don't interrupt. You do have a couple of questions coming in though.
Let's see what we got.
Yep. Greg and Ron.
Okay, let's see if I can I see them in there?
And Ken. You
Well,
should. You are. Okay, let me just read it for you.
Sure.
Do the indicators come with the monthly fee, or do you give the indicator settings to us?
What I'll do is, that's a great question. We do have settings on the site that you can purchase on your own if you like. We have them set up for TradeStation. We did have them set up with NinjaTrader, but right now TradeStation is where we're focused. And I'd be happy to give you the settings inside the room. I can tell you we use like the Commodity Channel Index, the CCI, as opposed to momentum versus stochastics. They do not come with a monthly subscription, but the trading manuals do help walk you through setting that up. It's kind of it's a challenge to do it with the manuals and do it yourself, but I'll answer any questions you want on Friday afternoon. I hope that helps.
Perfect. Very good. All right. And then I have one from Ron. Do you show your trades in your trade room?
I do not show my trades on, I've got like 3 different monitors. I will probably show the trades on Friday. I will probably trade live with only the micros. I have multiple trading platforms where I am trading for both aggressive longer term trades and shorter term trades.
Neat. All right, and then I have, can we get the monthly discount after Friday's trial? There must be an offer on Friday, right?
Okay, you want the secret? The secret is I will probably leave it open until Sunday at midnight. I'll leave that special, but then the special actually will disintegrate at midnight on Sunday. Yeah.
All right, Ken, you better get it in your calendar. All right, anybody else? We got 3 minutes. We did, thanks to Randy, we got right back on track. So we're going to end on time. And awesome. And also to you too. That is a great presentation that you just brought in. I'm sure you're going to get quite a few people looking at and being involved on Friday. So I'm not seeing any more come in. Is there anything else you want to add?
No, look forward to seeing you all on Friday. And if you have any questions, we'll have some question and answer period. And I look forward to seeing everybody. And Sherry, again, thank you for inviting me today.
Thanks for being with us. I super appreciate it. Now, everybody needs to know that we have tradersexclusive.com. This is going to be posted up. Oh, he wants to know if your room opens at 9.
Oops, sorry, I turned my microphone off. the room opens up at 9:30, but I believe I have, I believe it opens up at 9, yes. I will make sure, how about this? I will make sure it's open by 9 o'clock in the morning if you'd like to join us.
Awesome. All right.
Okay, thank
All
you
right,
again.
and with that, thank you so much, Brian. That was Brian Rehler of Trader Shark, and not Dr. Seuss, Green Dot Green Candle Go. You guys want to meet up with him on Friday? We've got the link in the chat. You've got a special code that you can use to get in on that offer that he gave you. So with that, and this has been a presentation of Traders Exclusive. Our Twitter is options_info, and please do come back to tradersexclusive.com, and it's /archived_webinars. And I hope you'll join us again. Our next webinar will be June 16th. So we're going to skip we're not going to do one on the 2nd. We're going to do one on the 16th. I'm sure it'll be a great one. Hope you'll join us. And also you can expect email from everybody today because you did sign up. And of course, as always, everybody's supposed to email you ethically, and you will want to unsubscribe if it's too much or you're not interested. So anyway, everybody have a great day. And this is your host, Sherry, saying trade well.